Midday.
Woke up sweating, portfolio bleeding, accounting the red like the feds are repeating. Every damn candle was looking deceiving. Jumped at the top, now I'm stuck here receiving. Leverage was heavy, my ego was deadly. Clicked up a call, now my balance is empty. Tried to escape, but the bids disappeared. Now I'm free falling with nobody near. Bid side vanished, spread got vicious. Every damn trade turned sacrilegious. Algorithms cooking, liquidity missing. Sharks in the water, I'm looking delicious. SEC knocking, they tracking my exits, but jokes on them. I ain't got no X's. All of my equities burned to a crisp. Got nothing but debt and a death wish. I played the charts like a symphony, but the rug got pulled in the first degree. Every tick was a guillotine. Now I'm running from the banks like a felony. I barely got out alive. Sold my soul just to buy the high. Took a loan just to make it right. Now I'm paying my rent with a market dive. All my calls got euthanized. Watching bears just eat me alive. Limit up, then it crashed through the floor. Now I'm sleeping outside of the brokerage door. Limit up, limit down, markets in flames. Brokers went ghost like they changed their names. Liquidity drained, every spread insane. All my positions got sent to the grave. Bid side rotted, ass side bloated. SEC laughing like they already know it. Dumped at the top, now the vault is corroded. Leverage exploded, I'm fully demoted. Bulls got buried, bears went rabid. Turn my whole stack to a market hazard. Options decay like a corpse in the attic. Takes I kept eating like it's automatic. Hedges got hungry, they chewed on the weak. Swallowed my equity, spit out receipts. Lost so much cash I should file a claim, but my brokers in hiding ain't taking the blame. I played the charts like a symphony, but the rug got pulled in the first degree. Every tick was a guillotine. Now I'm running from the banks like a felony. I barely got out alive. Sold my soul just to buy the high. Took a loan just to make it right. Now I'm paying my rent with a market dive. All my calls got euthanized. Watching bears just eat me alive. Limit up, then it crashed through the floor. Now I'm sleeping outside of the brokerage door. Circuit breakers couldn't stop this crash. I was too deep, now I'm wiped off the map. Made my whole stack off a leverage bet. Now the repo man's knocking like, where's it at? I barely got out alive. Sold my soul just to buy the high. Took a loan just to make it right. Now I'm paying my rent with a market dive. All my calls got euthanized. Watching bears just eat me alive. Lit it up, then it crashed through the floor. Now I'm sleeping outside of the brokerage door.
Oh, brother, oh, brother, oh, brother. Well, folks, we're going to have to pour one out for my calls because they are, they're as the song explains, they've definitely been euthanized. I'm very, very happy. I went with about 2/3 of my normal sizing, so I did size down. I knew it was a risk. I took the systematic entry. My bot told me to go long on all the technicals. It was looking good until it wasn't. It was looking good until Trump whipped out that board that he must have gotten from Kinko's 30 minutes beforehand. And man, oh man, are we having a historic sell-off. S&P 500 futures down 3.8%. NASDAQ futures down 4.6%. Oddly enough, Bitcoin is holding up a little bit better than I thought it would. Vol's up about 26%. This is, why did you get calls? Because that was statistically the smart move. I don't know. It just, once again, you could be dealt pocket aces. That doesn't mean you're going to win. Folks, this is what trading is. From a stats standpoint, the setup, not only from price action, but more so in the options market, the favorable move was calls. That's where big money was going. That's the structure. We had quite a bit of negative gamma above, positive gamma below, but this is how it works, folks. This is how it works. You can play pocket aces, and sometimes your aces get cracked. Now, I wouldn't really say yesterday's situation was akin to pocket aces. It was probably a little bit more pocket queens, I would say. Pretty good starting hand, solid flop, and then the turn and the river were horrible. We're horrible. Always hedge your downside. I did that by sizing down. I didn't take my normal bet size. I lowered it, and I still have time. It doesn't expire until the end of the month. So if we get somehow a recovery out of this, I might be fine. But also the other option would just to be cut it right now and then just wait for this to kind of like play out, I suppose. I mean, I think I truly believe we are closer to the bottom than anything else. I'll kind of go through the entire breakdown for you guys, but the way we just have so much negative gamma above, we have so much positive gamma below. We know there's a lot of people going to get into puts and vol so high. So the way it's setting up is it's kind of dangerous right now without even having like we've had from Trump's announcement till now is just the overnight session. We haven't even had like a normal trading day. So with that, it makes it really difficult to chase this to the downside because right below us is a bunch of positive gamma. We know that the market tends to mean revert. Chasing this to the downside is stupid because you're chasing a breakdown. Inherently, you have the most risk. If you already were swinging the position, well, congrats to you. Like that's a completely different story. Chasing it to the upside or like trying to catch this falling knife is also very risky because we don't know how much more panic's in the system. And like, it feels like this is going to be one of those days where patience pays. It really does. Just to wait to see how this like all plays out. But yeah, I had, like I said, I sized down. That was my risk management because I was like I saw the system. I saw the bot fire off. I was like, do I want to take the trade? I took the trade. But then to help myself out a little bit, I figured it's such a quarter flip situation with Trump's announcement. And like I said, at first it was looking great when it was reported by the Wall Street Journal that it was just going to be 10% across the board. And then he brought out his own board and said, no, 10% is going to be the minimum and everyone else is going to get quite a bit more. And I want to break that down. I think there's a lot of interesting aspects of this to get into. So I want to break down what happened, what's going on, what I'm looking for today, just so we're all a little bit better prepared for the market. Can we have circuit halts to the downside as the trading halting for a day? Been seeing stuff. What? Can we have circuit halts to the downside as in trading halting for a day? Been seeing stuff on X. Thanks, man. Spilled bong water. I don't think you spilled it this morning. I think it successfully stayed in your vase there because it seems like you've been using it a little bit. But yes, you could have a circuit breaker halt. There's a circuit breaker halt at 7%, 13%, and then also 20%. And the first two are for like a certain time period. The third one, like a level 3 circuit breaker halt, has actually not occurred. We haven't had one of those, but it would turn off the overall market for the remainder of the day. But historically, actually, we were kind of asking ChatGPT about this a little bit ago in the Discord, and there were circumstances in U.S. stock market history that we would have had a circuit breaker halt and like it would have turned it off for the rest of the day, but the circuit breaker system wasn't created until after those events. So we've had a couple level 1 circuit breaker halts, but really we haven't even had a 2 or a 3. There are instances in which that would have been triggered, but the circuit breaker halt system for the overall market was not implemented till after those. And in fact, they were created because of those events. So we're still kind of looking for it, but yeah, a 7% sell-off, a 13% sell-off, and a 20% sell-off would be the circuit breaker 1, 2, and 3 for the overall market. So might come into play today. I kind of doubt it. And I doubt it because I think people who had puts are going to use this opening to take their profits. So right away, I think we're going to see the put delta pop, which is going to kind of actually push the market higher. And then even if it doesn't, as I'm going to show you, there's a lot of positive gamma right below us. So I'll point out the key levels, but it doesn't seem that likely, but also who knows? This is a crazy time. Like basically we're making conjectures and bets and thoughts on what in the world is going to be going on with big money, big institutions and how they see this situation. So, a lot of it, I mean, I could point out the setup of it, but at the end of the day, it's going to, like, this is a historic event, what you're seeing right now. Now, is it the worst thing the market's ever seen? Oh, obviously not. But what you're seeing is going to go down. Like, people are going to remember this particular day. So when it's that intense of a situation, I try to really stay away from making any just like grand predictions on this situation. So I'll show you where the support's at. I'll show you where the resistance is at. Most importantly, we're going to want to check the options flow and the positioning as soon as the market opens. And obviously between now and then, I'll kind of give you the setup of what the world's going on and why we are getting the reaction we are getting right now. But it's wild. Absolutely wild. So let's hop right into it. Dow futures tumble 1,000 points on fear trade tariffs will spark a trade war. Well, golly, they very well might. Right here, you could see the SPY down 3.8%. You could see the Qs down 4.5%. You could see vol is up 27%. And right now in real time, Bitcoin's getting hit. Things were good at first in pre-market trading, and then we just got absolutely murked. And it's not just us. European stocks fall 2.2% as key sector upended after Trump tariffs. So it's all coming down to the tariffs. And we're going to come back to this, but I want to pitch this right here, and then it'll make more sense when I come back to it. But Bill Ackman tweeted this out this morning. Sometimes the best strategy in a negotiation is convincing the other side that you are crazy. Maybe this is a master level class in game theory, or maybe Trump is actually just crazy. So I want you to think about that as we're going through the current situation of what was announced last night and really every other thing that happened from the announcement last night up until this moment. But we're going to circle back to this, so please keep this tweet in mind. Trump's tariffs aims to create a new world economic order. The announcement Wednesday stunned markets. It could also push countries, including the U.S., to the brink of recession. So this is the TLDR of what happened was we went into this event. It was at the Rose Garden yesterday, and a little bit after market close, the Wall Street Journal reported that it was going to be 10%. And everyone's like, sick, that's way less than we expected. And then a little bit into the conversation, he broke out this board, and I'm going to show you a better picture of it. But basically, there's a lot of major trading partners that he is hitting with massive tariffs, like way more than really anyone anticipated. And the computation on how he did it was not really reciprocal. It kind of was, but we went into this event thinking that, oh, okay, if someone is tariffing us, then we are just going to be reciprocal, and whatever they tariff us, we're going to tariff them. That is not how it's going. That is not how it's going at all. In fact, they have a really, really weird formula of how they decided what should be reciprocal. So, of course, we're going to be getting into it. But obviously, that was quite a bit of a surprise, and you could tell that it caught the entire market off guard because going into this event, in the shortest time period, we had the options market dominated by calls, as in people were going to be bullish into this. And it obviously, everyone just kind of got caught off guard. See Trump's list, more than 180 countries and territories facing reciprocal tariffs. It is everyone. And this is just one of the many boards, but right here, the whole thing is surprising, but the most surprising is right here, China, 34%. We are hitting them with a quote unquote reciprocal tariff of 34%. Now, there's a couple things that I want to, explain going into this. I guess number one, I understand that half the country likes Trump. I understand that half the country likes Biden, and Kamala Harris will even say, and really I could say that for half the world. Half the world's going to be supportive, the other half isn't. And I'm currently torn on this. So in the short term, all the MAGA people who are standing up and saying, hey, I know there's some short-term pain, but this will be better in the long run. Okay, I get that argument. If Biden did this, the right side of the aisle, Republicans, the GOP, would be losing their fucking mind. So I find it a little bit hypocritical that there's a lot of people right now saying, nope, this market sell-off is 100% fine. This is for a better solution at the end. And even if you might be right, I would guarantee you if Biden did this exact same thing, you would be losing your fucking mind right now. You would be like, this is one of those things where even with the same action, depending on who's doing it, you're seeing either support and or hatred. So let's just be a little bit honest right now that all the people who are running around saying that this is the best thing ever, if Biden did this, you would be fucking fuming right now. Absolutely fuming. On the other side, this is most likely going to end up with the U.S. winning. Now, I'm not saying that we're going to see it this month, this quarter. We might not even see it this year, but I truly do believe if you fast forward anywhere from 2 to 6 quarters, this is going to be the U.S. winning. Right now, I fully understand there is short-term pain. Without a doubt, you're seeing it in the market. Real people are being actually impacted. But what this is going to do for manufacturing in the U.S., what this is going to do for investment in the U.S., this is a very, very rough way to get there. But we are being presented with one of those opportunities of how did you not buy the dip? We all thought that with COVID in March of 2020 of like, man, that was a dip. Why didn't I get it? What's going on right now? I truly, deeply believe when you fast forward, like I said, anywhere from 2 to 6 quarters, what this is going to do for business in the U.S., it's going to be absolutely massive. And it's going to take time to get into the systems, to get into the companies. But there's, like I said, fast forwarding a couple quarters, nothing in the short term, a couple quarters, we're going to start to get those earnings reports. And I don't see a way in which they aren't absolutely just like lights out amazing. So, hey, I mean, the Trump administration said they want to bring jobs back here. They want to bring the 10-year yield down. They're doing what they said they did. I guess the whole promises made, promises kept. But this is a very like bull in a china shop way to do it. So I guess I wanted to talk a little bit about the hypocritical nature. I do believe in the short term, this is going to be very painful. I do believe in the long term, this is going to be very successful. But I do want to talk about the absurdity of what's going on. And I'm seeing a lot of misinformation. I want to clarify that this idea of like, oh, China is tariffing us 67%. So like we should clap back. Okay, first of all, they are tariffing us. They're not tariffing us 67%. Actually, tariffs charged on the US, including currency manipulation and trade barriers. Well, first of all, like that is an additive fee, but they're not tariffs. And also that has nothing to do with how these numbers are computed. If you go into like seeing how these numbers are computed, your mind is going to be blown. But like for anyone, I get it right now because it's on a board and because the president held it up. There's this assumption that people are like enraged that China's tariffing the US 67%. They are not tariffing us 67%. I'll actually show you how they came up with these numbers. Trump tariffs incite fury in China and dismay in Europe. Really, the TLDR today is going to be how all other countries decide to clap back and how they respond. And we're already getting a little bit of that. China urges U.S. to, quote unquote, immediately cancel reciprocal tariffs, vows countermeasures. It'll be interesting because we already have a vow from Trump that anyone who claps back and imposes a, quote unquote, countermeasure, he's going to reciprocate on top of that. So, Jesus, this could get out of hand. But anyway, let's get to the formula. Trump's reciprocal tariff formula is all about trade deficits, as in really has nothing to do with tariffs, currency manipulation, or trade barriers. The three things that we're getting in the billboard of like how they computed tariffs, once again, existing tariffs, currency manipulation, and then on top of that, also trade barriers, and that is its own little story. But regardless, those are the three things that we are told how they're computing these numbers, except none of those are actually used in the computation to come up with the tariff number. This is exactly it. The Trump administration calculated new tariffs based on existing trade balances, dividing a country's trade surplus with the U.S. by its total exports, then dividing it by 2. Nothing to do with tariffs, nothing to do with currency manipulation, nothing to do with trade barriers, nothing. It literally just has to do, like, this is so crazy. So when you're seeing those tariff numbers, please understand it has nothing to do with tariffs. If you think right now that China is tariffing us 67%, that's not right. It's literally just a trade balance differential, it has nothing to do with tariffs, currency manipulation, or trade barriers. It has all to do with the existing trade balances. That's how they got all of those numbers. And it blows my mind. It blows my mind. And whatever, I get it. In the short term, like I said, it's going to be painful, but it's so extreme. It's so crazy. Sometimes the best strategy in a negotiation is convincing the other side that you're crazy. This is so fucking Looney Tunes crazy that it's going to force everyone to come to the negotiation table. This is very, very much a bombastic, foot in the door methodology to force every major trade partner, and really 183 countries, it's to force everyone to talk to him. And do I think this is going to stand? No, because the numbers are fucking crazy, dude. Everyone's going to go into recession. Everyone's going to go into recession. And if it truly sticks, everyone's going to go into a depression. I think this is it's more of this idea of, okay, they think I'm coming in here. I'm going to be the fucking loco Looney Tunes dude coming in even higher to show him maybe he is fucking nuts. And it clearly is a negotiation tactic. I mean, the administration, whether you agree with it, whether you don't agree with it, they aren't dumb people. I'm not saying that you have to think they're moral or you have to agree with this approach, but it's not dumb. They know the numbers. They know that this is a pretty crazy way to compute tariffs. They get that. We get that. That's not, no one is saying, yeah, that's actually what they're tariffing. Well, some people are saying it because they don't do any research and they just saw that board that Trump was holding and no, that's how much they're tariffing us. That is not how much they're tariffing us. But I really do think this is one of those things that it's let's come in way over heavy-handed of absurdity, insanity, and force everyone to talk to us. So I think that's where we're at. But obviously with it, there's still real short-term implications. Traders bet on more Fed cuts with 10-year yield headed towards 4%. So we see that yields are moving. As of right now, there is expected to be no Fed rate cut in May, 77% chance that we stay exactly where we are. Fast forward to the June meeting, there's only a 23% chance that we stay where we are, as in there's a solid 77% chance that we get some form of a rate cut once again in June. Morgan Stanley came out this morning and said, actually, we don't think there's going to be any rate cuts this year. So it's not just the equities market, it is also the fixed income market that they have no idea what's going on. And it's just pure insanity. The Treasury Secretary says market woes are more about tech stock sell-off than Trump's tariffs. Okay. Maybe. But why do we think tech stocks are selling off, Mr. Treasury Secretary? The fucking mental gymnastics that people are going through, I just don't. Just be fucking honest. Just be honest. Hey, we know that we're causing pandemonium. We know we're causing chaos. Just be honest. We are doing this. We are willing to accept the short-term pain to build a better foundation for the future of America. That is the goal of this administration. We don't care about what's happening this week or this month. We care where we are headed years and decades from now. We are an America first administration. We care about the future of this country. We don't care about the movement this week or this month. Just be fucking honest. This is so silly. It's not tariffs, dude. It's not tariff. What the fuck, dude? This is so crazy. He's no, it's because of the Mag 7. Dude, it's just so wild. It is so wild. But it is, like I said, so wild, so crazy. It's kind of already working. Germany and France push for a more aggressive tariff response. They're not going to do it. They don't have the balls. South Korea holds emergency meeting to cope with the tariff crisis. The entire world is dependent on U.S. consumption. The capitulations will be fast and furious, and they've already started happening. That was quick. Thailand to negotiate with the U.S. on 36% imposed tariffs. Next, everyone else. We already had yesterday Vietnam saying, nope, we're not going to tariff. We're not going to tariff the U.S. anymore. We're already seeing, granted, they're not our biggest trading partners. Vietnam, Thailand, they're measurable, but the really truly big ones are going to be China, the EU, Canada, Mexico, but specifically the EU and China will be huge when those ones. So I expect those negotiations to take a little bit more, but we're already seeing the signs of it. We're already seeing the signs of insanity and of absurdity getting some countries to already talk to them. So we're going to find out. But I also want to remind you, this wasn't the only thing being discussed yesterday. There was also some tax talk in some of the conversation. And this isn't directly the exact conversation, but Senate pencils in $5 trillion for tax relief, leaves blank spaces for spending cuts through GOP framework employs controversial accounting maneuver and conflicts with a competing House plan. So there was some conversation from Trump himself yesterday in the Rose Garden about tax cuts. So that might be another thing to consider. It might become more important as we move forward through the next couple months, the next couple quarters, to see which way that does or doesn't break. But in the short term, obviously, we got initial jobless claims this morning coming in a little bit less than expected. At 9:45 and at 10 a.m., we're going to get some PMI and prices, non-manufacturing this time around. Once again, 9:45 and 10 a.m. And then on Friday, tomorrow, we're going to be getting the unemployment report an hour before the market opens. And we're also going to be hearing from Powell at 11:25, 11:30. This conversation tomorrow, Friday, April the 4th, is going to be a massive one because this will be Powell's first talk since all the craziness with this tariff stuff that literally just played out last night. So there, a lot of people are going to be tuning in to see what the guy with control of the money printer is going to be saying. So that's going down tomorrow, and that's going to be happening right after the unemployment report. So tomorrow's a pretty big day, definitely a massive day, but that's all. I'm also saying that today's a huge day. Quick side note, Amazon submits bid for TikTok as ban deadline nears. So this was another part of the conversation that Trump was having yesterday, talking a little bit about TikTok, who might be buying it, who might not be buying it, who's going to own what, who owns the strategy, this. And it does come into play with obviously the president of China, Xi Jinping, and the current trade war of will he accept it, will he not, because TikTok is owned by ByteDance. ByteDance is the Chinese company. So there's a whole nother little thread of drama here, another narrative that might get a little bit insane, but it is directly related to what in the world is going on. So I just wanted to share that with all of you. And now let's kick it back to the overall market. We are pretty much at the low of the post-market trading. Right now, you can see the S&P 500 down 3.7, and you can see the NASDAQ down 4.5. The seasonality of today, what is it? Thursday. Well, that's crazy. The seasonality of today is technically bearish. The bulls only win it 48% of the time, but when the bears win it, they win it with better size. So next year when this updates, most likely going to be a giant dagger to the downside. That's what happens when you gap down by over 3%. Absolutely crazy. Remember, if you want the daily seasonality, this is given out for free. Just sign up for the newsletter, mattkohrs.locals.com. All right, so let's get a little bit of a looky-see of what's going on here. So why I am saying today is a very difficult day. Well, first of all, whenever you have these types of like historic events, they are by definition difficult to predict, difficult to model because they just don't happen that often. So right away, when you know there's like a lot of pent up craziness in the system, that tells you, okay, like maybe be a little bit more calm, maybe size down, like you don't need to chase everything. So I wanted to point that out, first of all, just by the degree of this gap down. It is absolutely massive. I also want to point out that here, let me update this so you guys can see exactly where we're at. We are right on top of positive gamma. Remember, positive gamma here, actually, I can move myself up so you guys can see this a bit better. This is sticky price action, as in when you get there, the market makers tend to mean revert. So if you go down, they buy. If you go up, they sell. It's a mean reverting environment to be in, and we're right on top of it. Now, on top of us is negative gamma, as in up here is slippery price action, as in when you get going, you really get going. So I'm seeing all this positive gamma. I'm also seeing a lot of sold puts. Remember, when the market traders like yourself, my institutions, hedge funds, when they are selling puts, that means that these dealers are long those puts. So this is basically a bet that really there's a lot of support between 5,400 and 5,350. That is by definition a massive level of support, and it's also inherently creating all this positive gamma. So that's before when I was saying it's really tough to chase this to the downside because you're chasing it into major support. While on the flip side, if we're in the circumstance where market opens, dingity, ding, 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 all these people swinging puts, if they decide to lock in their profits, well, that's going to remove a lot of delta associated to puts. And then all of a sudden we might pop up into this negative gamma. And before you know it, it could be a rip. So that's what makes it really tough, because in one situation, you're talking about shorting a breakdown, which is inadvisable, especially in this setup. In the other one, you're talking about catching a falling knife in a historic based event, making both sides, ripping it long or ripping it short. Right now in this environment, we don't even have 1 day's worth of data to go off of. It makes it a very, very difficult trade, Obviously, we're going to be checking the options market as things get going today. I want to see what's happening with the puts. Basically, I want to know, are people YOLOing into calls or are they getting out of calls? And then on the other side, are they locking in their puts and taking their profit? Or are they actually being more aggressive and getting even more puts, thus pushing the market down even further? And please don't forget that this is all going to be in the context of knowing that Jerome Powell and the unemployment report are going to be kind of taking center stage tomorrow. So another thing to not forget. With that being said, according to the options market, these are all the key levels. This is kind of useless for us, but I just want to let you guys know that this is the transition zone all the way up here. So above it is bullish, below it is bearish, and we are scheduled to open all the way down here. So yeah, safe to say we are in pretty much the bearish region of this. The 5-minute, 10-minute, 30-minute, 4-hour are all bearish. The 5-minute, the 10-minute, the 30-minute, and the 4-hour are all bearish. So all price momentum is bearish. Obviously, this is a massive gap down. We're all the way down here. So, I mean, this is the process. I need to tell you where the transition zone is, but I think all of you guys know we're kind of in the bearish territory. Now, I had to do a little bit of extra work to try to figure these out today of what the levels are that are important. We're currently at 5462. So we are currently right around here. We do see some clustering at 5,500. That was a major level that we bounced off of before. So the bull play of the day would basically be taking out this first target. We do see some open interest at 4,475. And then the real battle will be at 5,500. And above that, it's actually kind of easy sailing up to 5,550, especially with all this negative gamma. That would be the bull case. The bear case would be it doesn't break 5,475 and we end up testing the first bearish target of 5,450. If that doesn't hold, the next thing I see like potentially saving it is 5,400 and really somewhere in this 50-point region, because once again, coming back to this, that's where all the positive gamma is. That's this entire zone down here. That's where your zone of support is. So the bearish setup is basically we open up roughly where my cursor is. We don't hold this for support, and then we puke down to that positive gamma, and then we find some support there. The bullish setup is we actually have the puts taking their money off the table, locking in those gnarly gains, and then we start to push up, and we take out roughly 5,475. Big battle at 5,500, and if it can push above that, most likely the negative gamma will allow us to really just kind of whip right all the way up to 5,550. So that's the bull case. That's the bear case. Right now, I truly have no bias. And I know that might be a crazy thing to say based on the size of the gap down, but when you've traded these days enough, you realize that crazy things happen. Like I have seen these types of days really just rip completely the other way. So please keep that in mind. And also keep in mind, dingity, ding, 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 the world's largest casino is now open. Best of luck to all. Play responsibly. And if not, have fun. All right, so with all of this craziness, I wanted to do something special for all of you guys, and this is working out perfectly. At 10 a.m. today, we are having a former options market maker, Brent from Spot Gamma, come on. He's going to give us a breakdown of what he sees going on in the options market. This is going to be in a mere 30 minutes, and it works out perfectly because they're actually also in Spot Gamma. They just yesterday launched a brand new tool that gives you even more insights to not only the overall market, but also just to every individual equity. So the timing of this could not have worked out better to kind of get an expert opinion on how to handle this situation, and then also kind of get a very quick breakdown of how to use some brand new tools from Spot Gamma. So once again, that's at 10 a.m. today. 10 a.m. today, Brent is coming on, giving us a breakdown, and we're also going to learn how to use a couple new tools, which I'm very, very excited about. I was already playing around with them this morning. Pretty cool stuff. So I think that really just being able to have that expert opinion, I think maybe making people feel a little bit more calm. But right out of the gate, yes, of course, you have some profit taken. Those puts popping up, that is people closing out their puts, locking in their money, which completely makes sense. So if you thought we were going to puke right out of the gate, you just got to pay attention to more days like this, because it is very, very common in massive gaps that we start to fill the gap right out of the gate just because people are locking in their money. And we are literally seeing that in real time, where we were at right here. That dark blue pumping up, that is the put delta going higher. It goes higher when basically puts are being taken off the table. Looking at the Mag 7, a little bit of pop, but now those puts are actually getting more aggressive. S&P 500, we're going to keep coming back and really checking this out throughout the day. Dude, the colors are so weird when you're wearing those red glasses. anyway, like I said, I think the name of the game here is calm, cool, collected. I mean, I was doing a lot. I got up crazy early this morning to do the breakdown of the market and see what's going on. And I came to the overall conclusion that this is a very dangerous environment to chase to the downside. And it's always a very dangerous environment to try to catch the falling knife. So you gotta be patient. But one thing I want to throw out there is, if you think about the market and the highs and the lows being peak greed and peak fear, that type of a thing, this is now the worst situation. Like, we are now seeing the market at the worst situation. This is it. Like, the tariff situation came in way worse than anyone anticipated it. Like, this is the extreme. We now know. Now that uncertainty is removed from the system. Really, from here on out, we're just kind of waiting for when these other countries end up coming to agreement. Of course, like, there is a non-0% chance that it could break the other way, and China and EU and Canada and Mexico could say, fuck you, we're banding together and we're doubling your tariffs. Okay, that could happen. That is a non-zero probability. So I think it's worthwhile to consider. But then you have to ask yourself, okay, even though it's not zero, it's probably pretty close to zero. So with that in mind, with that like one little asterisk, with that one little caveat, this is now the worst situation. Like, this is it. It's not like Trump is going to come out and say, oh, we're actually doubling the reciprocal tariffs tomorrow. So this is kind of it. Like, you're seeing it. Like 545, that's the extreme. You're seeing the Qs, that's the extreme, 456. So right where we're opening, that's like kind of that peak fear gauge. So now we're looking, okay, there's a non-zero chance that the fear gets worse. There are uncertainties, but I think from a probability standpoint, it is much more of a likely pathway that from here on out, now that we know the numbers, people settle, fears settle, and if anything, ideally, we're going to start getting those little murmurs, those little rumors from someone, sources familiar with the matter, that trade negotiations are coming along swimmingly. And that's what I'm expecting over the next couple weeks, the next couple months, that all these like conversations, I think there's going to be things kind of slip to the media that like things are improving. But yep, we already popped somehow $2.50 since market open. Tesla, I mean, there's a lot of red. Actually, Bitcoin's in the green, and Vol is in the green, but it is not out of question that we end up slipping into this negative. Like, I cannot express this enough. If we slip into this negative gamma, don't be surprised if we have a multiple percent recovery up to these major levels. We popped right here to 5,500. This is the first major battle. If we successfully get above this and hold above it, I see a very easy $5 pop in the SPY and really a 50-point pop in SPX all the way up to 5,550. But obviously, that's a big if-then statement. First, we'd have to break this because right now you're already seeing a rejection. And why are you seeing a rejection there? Because it's a fucking huge open interest level. It's a massive technical level. You're going to naturally have a reaction. So I have no prediction on if we break or we bounce. I'm just saying, if we do get rejected, I'm watching 5,475. If we break out, I'm watching all the way up here at 5,550. And obviously, kind of just continually checking out the negative and positive gamma zones. But I do want to stress this enough. This is quite a bit of support down here. This is a lot of sticky price action up here. It's kind of just the sky's the limit. That's a lot of negative gamma that if we get going, it can really, really get going. So patience out of the gate. Obviously, we are trending up, making higher highs and higher lows. I do want to show you this. Puts are getting, the put delta is dropping on the Mag 7 while the calls are going flat, bringing it back to the S&P 500. Put delta did pop. Now it's dropping. Well, calls are actually picking up. So the call delta is going up and the put delta is going down. So they're kind of at odds there. A little bit of a mismatch there, but that's why we wait. Dead cat bounce for breakfast, bouncing off the walls of the well as it descends. I don't know. Like, why? You have to ask yourself, okay, if you're predicting a continuation to the downside, the market's already been trading. Like, what piece of news is going to make this situation worse? Like, think about it that way. The futures market was trading this entire event. We see what's going on in the Asian markets. We see what's going on in the European markets. Remember, like, for this to go lower, you would naturally expect that there has to be an additional, like, worse piece of news. What's that news going to be? Like, why are you assuming on the information we already have from last night that it's now going to be digested when we've already known about it for hours. We've already known about it for what, 15 hours, more than 15 hours. We already saw what was happening in the Asian markets. We already saw what was happening in the European markets. Like, markets have been trading. The futures market has been open from 6 p.m. last night until now. That's what we saw from the gap down. Like, futures were actively trading. The big money was kind of already paying attention to this. So to assume that this is going to be the start of a massive sell-off from here doesn't really make sense. At least it doesn't make sense to me, because the information's already known. The reaction happens right when it's being announced. It's a very quick thing. That's the efficient market hypothesis. And then on top of that, we have a fuckload of puts sold beneath us. So I do want to stress that support, it is deep. Like, it is here. Like, theoretically, we could sell all the way down to here and still not be at support. So we're seeing quite a large widening of where our support and our resistance is. So, like, I want to clarify, we're not necessarily at support right now. Granted, there's an open interest level, here's an open interest level, but this giant gamma support that I keep coming back to, it is all the way down here. So I guess, just to be fair, that would be an additional 2% sell-off, an additional 1.6% sell-off. But on the flip side, if we break out of this, that's a 1% pop. So, like, I think we're just in the system where there's a lot of kinetic energy right now. And I think we're going to see a 1+% swing either to the upside or to the downside. And I don't think right now there is, like, clearly anyone in control from market open. I want to clarify, obviously, overnight session, the bears were clearly in control. But as of right now, this is not a layup of a play to go short. So I think there's a lot of people who are maybe new to the markets that they're seeing this situation. They're like, of course I have to go short. That's bad news. Look we're gapping down. But that's called recency bias. Just because the market sold off doesn't mean it has to keep selling off. Just because the market's ripping doesn't mean it has to keep ripping. It's literally called, like, that's one of the biggest issues in the world of the psychology of trading, is it's literally called recency bias. It's basically trading and investing based on emotions. You see all that red and you get scared and you're like, okay, I got to sell everything and I got to chase this to the downside. Well, guess what? The people who thus far have been trying to chase this to the downside since market open, they're all getting clobbered, because right now we are trending up. So, like, this is not one of those evident, like, hey man, like, you got to short it. No. No. It's not that easy. I wish it were that easy. It just simply is not. What do we have here? Calm down. Trump was, and right again, making big money on Tesla calls. Well, Tesla's down 2.5%. So literally you're talking about a 0 DTE trade. And literally, no one with any trading ability at all at market open is going to be right 50% of the time. So that's not like that impressive of a call out. You could literally find a person on the street who's never seen a stock chart ever in their entire life, and they could still have a 50% accuracy rate. Just make them flip a coin at market open. Hey, are you bullish or are you bearish? So, like, just the idea that you're using a singular trade instance to try to prove your trading prowess, that's a silly thing to do. Because literally someone with no ability whatsoever would have a 50% accuracy. So, like, just chill on that. What matters is your, like, actual long-term success, not like one individual trade. When people try to use a singular trade to prove how good they are or aren't, that's really, really silly. That's really, like, what matters is, like, the longevity of it. Like, how long have you had a profitable track record? Is it a month? Is it a week? Is it a day, a week, a month, a quarter, multiple years? Like, what is it? But one individual trade doesn't make you. One individual trade could definitely break you, but it's not really, I guess, receptive of, like, the quality of your trading. What exactly is a goon? There's a movie named Goon, which I believe has to do with, like, kind of the enforcer and the fighter on an ice hockey team. It's that guy who was Stifler. I believe he's the actor in the show. Look at Apple stock. 9%. Oh, fuck, dude. That's brutal. But this is what happens because Apple, they create almost all their stuff in China. Like, if there were a company that were, like, clearly positioned to get hit, like, caught in the middle of a trade war between the US and China, it would be Apple. Apple does all of their fabrication, all of their manufacturing, all of it in China. All of it in China. So it's not like this makes sense. It makes sense. That is brutal. Brutal. They had to cover all of the naked shorts and everything. No. Matt, I don't get why semiconductors are falling. The tariffs were not for them. What do you mean? He literally announced a specialty tariff on computer supplies, semiconductors. And guess where they're all made? Not in the US. So why are they falling? The tariffs were not made for them? Well, you're just wrong. They are impacted by these tariffs. They are very clearly impacted by these tariffs. Wait, you really thought that semiconductors were unimpacted by this tariff situation? Like, he specifically went out of his way to say that they would be impacted. There was an exception on semiconductors. There was a difference, but not an exception. Like, what are you talking about, dude? Just literally go give it a basic Google search. I don't know what to tell you. You're just not living in the reality that the rest of us are living in right now. But if you know a way to wheel and deal semiconductors without being impacted by tariffs, there are many global governments that would be interested in talking with you. But folks, you don't need to rush anything today. I think there's going to be large swings, large movements, large opportunity. Here's a look at the options flow. What do we have going on? Mag 7 getting collapsed. That delta is getting smoked. Looking at the SPY also, there was a little bit of a pop for the first 30 seconds, people taking their money, and then a little bit of a pop at 33, people taking their money, and since then, getting clapped. Dude, Apple looks horrible. Down 9%. 9%. This is so brutal. Someone said, good game. The viewer numbers are ripping. The numbers. Oh, what's up? We got a lot of new people in here. Hey, I'm Matt. I'm a degenerate gambler. I like long walks on the beach, candlelit dinners. I cry in the shower way more than you might expect. And if your expectation was already high, trust me, I cry in the shower way more than that. I'm trying to think about any other things. I'm 5'10" on a good day. I used to be a professional stair stepper, and now I've actually kind of converted over to being a professional sauna sitter. I'm trying to think of anything else that you guys really need to know about me. My agility is questionable. I was really never like that quick. Like, I was quick enough. Like, you wouldn't look at me and say slow, like if you saw me in any athletic endeavor. But on any team I was on, I was never the fastest person. I was like middle of the pack. We got the PMI numbers just came out at 9:45. And then there's more. That was the S&P Global. We're going to get the ISM non-manufacturing numbers at 10. So we get an announcement here at 9:45, another announcement at 10. And then also at 10, we're going to be hearing from... Well, no, I don't think. Isn't one of the Fed members speaking right now? So bullish, 15-minute ORBO. I mean, we didn't break it quite yet. The 15-minute ORBO, we just literally got the 15-minute opening range, and the ORBO hasn't broken yet. ORBO is a pretty popular trading style. The thing with ORBO is you need another filter on there telling you if you should or you don't want to take every single ORBO trade. Not every ORBO setup is made equal. So you're going to want to have other filters on top of it. Like, for example, I just marked out the opening range for the first 15 minutes, the high and the low of the first 15 minutes. It is a popular trade to take the breakout or the breakdown as soon as it gets there, saying, okay, like whichever way it breaks, you think that the market's going to be continuing that way. And that's a good trade. But to make it net profitable, if you were to take that trade every single time, over the long run, you'd probably be net profitable, but you would have to suffer through quite a bit of variance and quite a bit of drawdown. So to make it a little bit of an easier path of either taking the breakout trade or the breakdown trade. You're going to want to add in other filters to it, other indicators of like, okay, should you take the trade that day? Or really, you should probably have a filter that tells you the bias of like, okay, you're coming into the day with a particular bias, so you're only taking the breakout or the breakdown if it also aligns with the bias that you already had. I've seen that have a little bit of success, but it depends on how good you are at using your other indicators and secondary and tertiary data sets to decide which ORBO you should be taking. So it's good. I mean, it's kind of born out of like old pit traders where they used to trade like the 30-second ORBO. So like whatever the first 30 seconds were, if it broke out or break down, the 5-minute, the 10-minute, the 15-minute, the 30-minute. I would say the 30-minute and the hour are probably the most popular ones. In fact, taking the hour is such a popular trade that for whatever reason, it's called the initial balance. So if you ever hear IB, the initial balance, that's what people are talking about. They're talking about the opening range from 9:30 to 10:30, the high and the low of that first hour. And then the trade would be either taking the breakout or taking the breakdown. That's another thing you could do. Once again, these are all good ways to get started, but some of them like out of the gate are profitable strategies, but they're not like that good. Like they could be like very seriously improved, I suppose is what I'm trying to say. They can very, very, very much be improved. So yeah, I mean, if you ever hear about ORBO, it's the opening range breakout or breakdown. If you hear about the initial balance, it's the same thing. It just happens to be the first hour. And the opening range is just how much time. Are you looking at the first minute, 3 minutes, 5 minutes, 10 minutes, 15 minutes, 30 minutes, 1 hour? I do want to let you know that when you go below 15 minutes, the odds do get worse. Like the quality of that trading system, sub 15 minutes does start to fall off. And if anything, the half hour and the hour are probably better just on the initial concept of the opening range. So like the 15 minutes, fine. The 30 minutes better. The 1 hour is also pretty good. It comes back to having the patience and waiting for it. But you're going to want to add on other aspects to it of like, okay, if you get the break, do you want to wait for the pullback into the range and save yourself some money? Like, do you want to do like a 50% retracement and then that's where you get in? Or do you want to take the trade right when it actually breaks? Like, it's just, there's a couple ways to do it. Well, there's more than a couple. There's borderline an infinite amount of ways to do it. And I suppose you just have to kind of back test and utilize the one that is actually net profitable and has positive expected value. All right, we're getting a little bit of an update here from Mexican President Sheinbaum. There will be measures taken to mitigate the effect of tariffs on German automakers in Mexico. Okay, that's an interesting update. German automakers in Mexico. The services PMI actual was 54.4. The forecast was 54.2. So the PMI services number coming in higher than expected. And we're going to have more non-manufacturing prices and numbers coming out at 10 a.m. Also at 10 a.m., Brent will be joining the show to be giving us a breakdown on just this current chaos. If you guys don't know Brent, he's an expert options trader. He runs an option trading platform. He's the guy that is part of the team creating all of Spot Gamma. So when I say an expert, I mean he's legitimately an expert. So he's invited onto the show to give us the breakdown of what in the world he sees going on in the market right now. And then also there's a brand new tool right here I could show you that he's going to kind of explain to us a really cool new grid that, once again, if you're on Spot Gamma, it's already there. If you're an alpha subscriber, you already have this. It's not like an extra charge or anything like that. Kind of cool. Kind of tells you about are things cheap? Are they expensive? Ranking it by IV and also risk reversal. So it's pretty cool right now. Cheap volatility, upside potential, calling out MSTR. So on a relative basis, if you think that the market is going to bounce, like if you're like, nope, I'm buying this dip, you would be better off going long on MSTR than you would be like something like Google, just because they obviously have upside potential. They both have upside potential, but right now MSTR it's cheaper if you're exercising that opinion via the options market. So we're going to get into a lot more detail of what this is, what this isn't, how to use it. But that's going to be going down at 10 a.m. where, once again, Brent from Spot Gamma will be joining the show to kind of give us his thoughts and opinions on this current market craziness, and then also how to utilize some of the option tools to get a better read on the overall situation. How to get a little bit of a better read on the overall situation. Oh, man. Well, we never got the ORBO breakdown. We got really close to that first minute, just never came. And now the Qs are actually lifting us back up. Lifting us back up. Oh, brother. Oh, brother. Oh, brother. Oh, brother. Where are we at? Basically, I'm waiting to see if we get this breakout of a key psychological level and a key options level at 5,500. Please be careful tracing this to the downside. I mean, I cannot stress this enough. There's a massive amount of support right here. This purple zone is all positive gamma. And if we start to go, if we can clear 5,500, this is all negative gamma, very slippery surface, as in you can really get going. Now, for that to happen, obviously there needs to be enough bullish aggression relative to bearish aggression for us to take out this key level. And clearly, just as of now, that hasn't happened. Speaking of options flow, here's a look at it. The S&P 500, it is getting hammered. It's absolutely getting hammered. People are getting longer duration, like the put delta is dropping and the call delta is only barely going up. Looking at the Mag 7, put delta dropping and actually the call delta also dropping. So right now there's still a clear amount of, I don't know, hesitation in the market, if you will, but it's going to be coming down to, I want to see, are we breaking 5,500? Because look at this. These levels were called out before the market opened. Rewind the show, and you're going to see I called these out as major option levels. Look at support, right into resistance, right into support, and maybe right back into resistance. We're kind of waiting for the break of this particular range. If we do break down 4,550 is the next key level right here on SPX. If we break out, I'd be watching 5,550. That's once again the next key level to the upside. So that would be my bullish target on a breakout, and this would be my bearish target on a breakdown. And until then, you just have to have the patience to do absolutely nothing. The 5-minute and the 10-minute actually tried to go green here on the EMA cloud. The 30-minute and the 4-hour are still pretty brutally bearish. The 5-minute and the 10-minute are actually NQ. This is holding bullish. Obviously, this is a very, very, very short time frame. I'm just talking about the 5-minute, but we are above the EMA cloud, while the 10 minutes attempting to test. The 30-minute and the 4-hour are also very clearly bearish, especially the 4-hour. But interesting that in this short time period, the 5 and the 10 tech is showing a little bit of relative strength right now. While I say that, and the SPY is just getting absolutely hammered. All right, let's check out the other sectors. Energy is getting a shamote. Financials are loading, also getting hit pretty decently. Utilities just got hit. Industrials getting hit. Healthcare, loading, also getting hit. Real estate, really getting hit. Consumer staples are holding flat. That's interesting. Consumer discretionary also picking up. So XLY is the consumer discretionary sector picking up. Consumer staples is XLP. So those two are interesting. Tech is also trying to swing around, but so XLY and XLP, consumer discretionary, consumer staples showing a little bit of strength. Tech also trying to pick up, but then all the other ones are just like real estate is just getting stomped. Utilities getting stomped. Industrials getting stomped. Healthcare stomped. Financials stomped. Energy stomped. So there are some decent sectors, and then there's other ones that are just like actually in real time getting murdered. Real time getting murdered. I suppose it's how it happens. Matt, my calls aren't worth as much as yesterday. Is there a way to get a refund so I can try again? Yeah, call up the brokerage. Maybe you can get a refund on those. Netflix is in the green? Seriously? It was for a second there. Netflix. Dude, the market's like, fuck it, dude. Fuck it. Everyone's like, I'm just going to be watching TV anyway. No one's giving up on streaming right now. That is hilarious. That Netflix, everyone's like, dude, I just got to watch my Emily in Paris right now. I got to watch my Drive to Survive. Like it doesn't give a shit. Like the overall market loses $2 trillion in value. And everyone's like, but I need my subscription. I try to tariff Netflix, brother. Oh, I love it. Netflix, I'm like, dude, I'm still going to watch TV. We don't give a shit. Don't give a shit. They're like, what was that joke? That's funny. We gonna drop more Tiger King, get in here. They're like, yeah, we'll fight tariffs. He's like, just Tiger King season 5. Wow. Netflix. Bonds are up. The yield curve is up. It's not so good. Amazon's down 7%. Coin's down 7%. MSTR is down 6%. Meta's down 7%. Dude, things are... Netflix, I'm very impressed. That is, talk about relative strength. Netflix basically going green, was green for like a brief second while the market is getting its teeth kicked in. That's just wild. All right, so speaking of the opening range, if you guys were a little bit confused, so right here, we just broke the opening range. Right here at 956, we broke the first 15-minute bar. It's just the first whatever time frame bar of the day. You look at the high, you look at the low, and obviously we just snapped the 15-minute low, which was created at 9:30 on this particular day, breaking down. But the NASDAQ is still within its 15-minute range. We haven't broken out. We haven't broken down. Looking at the options flow, here's a look at the S&P 500 getting murked. Looking at the Mag 7, got murked, popped, and now kind of flat. So not trending down as much as it was, while the S&P 500 is literally just hitting a low right now. The 5-minute was trying to go green, got smacked, and the 5-minute on the NASDAQ is attempting to hold green. Maybe Netflix will save the market today. Maybe Netflix is going to be putting the entire market on its back and save us. That would be something. All right, folks, excuse me for 1 second. Let me make sure we are ready to go for our guest today to get somewhat of a breakdown of what in the world is going on. What's going on? What's not going on? All right, we did that. We are good to go, I believe. All right, we did this. All right. All right. Why is the market not updating for you cool cats and kittens? All right, so right here, this is a good example of maybe on that the 15-minute ORBO strategy, you might not want to just arbitrarily chase it, because right here we broke down and then quickly got pushed back in because the breakdown was happening at a key level. And maybe this is a legit breakdown. Maybe it can't recover here and we vomit to the next major open interest level, once again at 5,450. But if it does recapture here, a little bit of a fake out breakdown, and then maybe a potential pop all the way up. But folks, it is 10 a.m. right now, so we are going to kind of get, oops, hang on, I think I lost my chart for you guys. Oh, market's taking a bit of a hit. I do want to remind you that there's an announcement coming out right now. We get the ISM non-manufacturing numbers, and actually I might be able to grab them for you. Hang on, I'm not seeing them being reported quite yet. All right. It looks like maybe a bit of a recovery. And Brent, can you hear me? Good. Hang on. What's the note taker in here? Can we get rid of that? How do you kick out note taker? I think it's your thing. Hang on. Am I able to just kick it? It's going to mess up our rename, make host, remove. Okay. Don't report. All good. Let me switch it up so everyone can see your face after a pretty historic sell-off. All right, folks. This is Brent. If you don't know him, he's one of the masterminds behind Spot Gamma, which is an options analytics tool that I literally do not trade without. In my personal opinion, when you get into the world of technicals and price action, it's all inherently backwards looking. I believe the major tool that retail traders have at their disposal to have a forward-looking mechanism would be the world of options, which is why I'm personally such a fan of Spot Gamma. And it just so happens that obviously the team over there is pretty awesome. So what we're going to do today, For those of you who maybe haven't seen the previous interviews, Brent right here has a long storied history in the world of options trading. So I would love to start there before we get into some of your new tools of what is your takeaway on this craziness? I mean, the markets are down in excess of 3%. I see a lot of fear of saying, are we going to get circuit breaker halts? And like, obviously this is all on the back of the tensions of the trade war, the tariff war, like whatever you want to call it. What do you think? Like, in your opinion, is the options market setting up for a truly catastrophic sell-off, or do you think that like this is kind of peak fear right here?
Yeah, great question. So just a little background on myself. I have 25 years of institutional derivatives trading experience. So I started my career in the 2006, 2007, 2008 housing crisis. So I've been through a lot. And so the options market can tell us how people are positioned, right, in terms of fear and greed. And what I think right now is, you have to remember where we came from, right? We had extraordinarily overvalued markets. Now, those markets can continue to go higher. It doesn't mean I was like saying this is going to be all-time top in December, but everybody was complaining about market breadth and PEs are crazy and all that stuff. So we entered this entire thing with pretty highly valued equity prices, right? Then you see Trump come in and they literally tell you they're going to, that the economy may hit skid bumps, right? We all heard that stuff. So the reason I bring all this up is because I don't think anybody's super caught off guard by the fact that things have turned negative here, right? And the most shocking events, the worst events are related to credit events, right? If you start to see the credit market break, that is when you know you're going to get one of those really, truly historic moments, right? That's where you get a, VIX 40, 50 kind of like real panic. As far as I know, as far as I could tell, just reading around stuff, so far, we're not getting any kind of cracks in the credit market. Rates are actually kind of like coming down a little bit. And so when you talk about that kind of like, hey, we're going to read about this in the history books one day kind of thing, I don't think we're there. I don't anticipate us getting there. And if you start to see credit spreads or any indication that the credit market gets under stress, that's where you really got to be worried about that kind of like, okay, this is going to be literally a historic crash. Right now, things are pretty controlled. The selling seems pretty controlled. And in fact, if you look at where the market is priced, you see the VIX at 27 right now, okay? The VIX tends to have a 3.5 point premium to how much the S&P has been trading, okay? So if you look at how much volatility the SPX has had over the last month, it's around a 21 or 22 in that neighborhood. So if you had 3 points to that, you get, in the neighborhood of 25 for the VIX, which is fair value. The reason I bring that up is because the VIX is at 27 right now. What that's telling you is we just started today to get a little bit of fear, a little bit of excess panic in the market, but the market's down 4%. That makes sense that you get a little more premium today, right? And a lot of people weren't expecting this bad of a news out of the tariff event yesterday. So it makes sense there's this kind of reaction. Now we're getting this drawdown. It doesn't make the drawdown feel better if you own stocks right now, but this is kind of a controlled demolition at this moment. And the reason that is important to me is because if you look at the way the market's setting up right now, there's a lot of people selling puts or funds that are selling puts at 5,400 and below, kind of in that neighborhood. There's really no positions between here and that level. So S&P, as we're talking right now, is at 5,450. We wrote this morning, if we break 5,500, you have to look for that test of 5,400. And we should see a fair amount of support at that level for two reasons. Not only one, do we see funds selling puts under there, which means deals will start buying at that level. But number two, if we hit that level, then you're going to see the VIX at 30, right? And when we talk about the VIX at 30, then you start talking about a lot more volatility premium, right, in the market. There's a lot more fear in that number. There's a lot more padding in that number. And the reason that more volatility premium is interesting is because the guys that like and gals that like to sell options, that like to short vol, will start to come out when that premium gets rich enough, right? Because it gets more interesting to sell VIX or sell volatility, right? When you know that vol premium is really kind of thick and fat, right? So again, just to summarize this again, so far this is really controlled selling in my view. There's a little bit of big response today because Trump was, I think, more negative than people were expecting. So we're getting that reaction today, which means that equity prices should be relatively lower than they were this year, right? So 5,400 is the new floor. I think premium sellers come out, they sell there. They're selling at 5,400. Vol should hit a peak around that area, and we should look for an interim bounce at that level. And I don't see this reason for this like continuous waterfall cascade from this level until and unless the credit market really starts to crack.
So I guess two things there. First of all, when you're saying checking the credit market, the average retail trader, what's the most efficient way to see, is the credit market doing well, cracking, neutral? Like what tool do you use to track the credit market?
You can do a couple of things that are really simple. You could just look at like HYG or JNK. They're the credit ETFs, right? And if you just start seeing the price action, those is ugly, just like a chart, then you know that those bonds are being repriced, right? You'll start to see on Twitter too, people start talking about the CDS market, credit default swap market, different charts and stuff like that. When that conversation starts to enter the arena, so to speak, that's kind of like, that's why one of the things that's cool about X and Twitter is like, okay, like the credit market guys will start chirping. You'd be like, oh, this doesn't look good, right? And that's how you know, like, okay, these things are starting to show up, and that'll be the indicators we're all talking about. But the easy way is just you watch that JNK, HYG, and if the price action there is like really ugly, then you know something's going on. It's kind of like, do you remember in Silicon Valley Bank when that was breaking down? Suddenly everybody watched KRE, the small bank ETF, every single day. Like we were all watching it, like what's it doing? And it'll be the same thing with HYG or JNK. And the big thing there is that if the credit market starts to crack, right, that's where like the really big money is. And what happens is if you think like, I have no idea, I'm just making up a name, Ford, right? Ford's going to go out of business. And again, I have no idea about this, so just use them as an example. If you think that they could go out of business, right, and you own bonds in Ford, you can't protect yourself really in a very quick way against that debt, right? So what do? You buy equity puts, right? Because the value would be destroyed before the credit value. So you can hedge yourself in your bonds, right, by buying Ford puts. And that's where you start to see the biggest peak in demand, right? When the credit market guys will come out and go, like, we got to hedge the risk of all these defaults. So we're just going to do that by buying equity puts. And that's where you start to see just sort of like people paying any price to buy put options. And that's where, you get like the VIX to go extremely high, for example.
Gotcha. It's kind of, I obviously appreciate those insights, but what you're saying, especially in this like controlled nature right now, I was just listening to another trader podcast, and I love the saying of, what was it? A well-hedged pot rarely boils. So right here, like you said, there's a ton of support at 5,400. There's a lot of control. And like, I think people who are maybe new to the market, they see this drop and like, oh man, like, is this a peak fear thing? And it isn't. Like, if you want to see peak fear, like that was like the last time I really remember, it was more of like March of like the Rona period. That's where it was insane every single day. Capitulation. Yeah. We see a lot. Like there's that huge floor. I was just showing everyone on stream the trace map of like all that support there. And if anything, I'm not saying it's the highest probability pathway out of this, but there's a lot of negative to gamma to the upside. So all of a sudden, if we see these puts close out and we kind of tilt into that and we take out 5,500, 5,550, something like that, like we're just going to see the market makers say, oh, okay, we got to get out of our shorts and start to punt it long. So like, I don't want people to come into this high fear situation and do the exact same thing retail traders always do, is sell their longs and get into the puts, and they do the worst thing at the bottom, like literally the perfect inverse of what they should have been doing. And It's just always that Warren Buffett quote of, you got to be greedy when others are fearful. So obviously appreciate those insights, and kind of leading off of that, obviously congrats to you and the team. There's a brand new product that now everyone on Spot Gamma and the Alpha subscription can use. It's already there. Check it out if you're on Spot Gamma. I know many of you are, but I would love a rundown of this and how you would personally use it to kind of give you additional insights to the market. I don't know if it's easier for you to share your screen or if you want me to share mine and you could run me through it. Let me know.
Sure. I'm happy to share over here. Okay. And, I understand and appreciate, like, hopefully my terminology here is pretty easy for everyone to understand. And so at the end of the day, when you're looking at these charts and these maps, if you see red, that's kind of bad or high volatility. And if you see blue, that's sort of good and low volatility and support, right? And so, what we wrote this morning was I just want to show when we wrote so that there's no kind of hindsight in the way I was looking at this market. And the point here was like, look, if we break 5,500, and you can see it right here, right, that suggests that we're going to get this test of 5,400. And the reason I bring that up is because if the price action follows your plan, then there's no reason for panic, right? You go, oh, the market's dropping right now. Like, well, that was in the positioning of the data that explains all this, right? And the reason we were looking for 5,400, and this is what we wrote again, this comes out at 7:30 in the morning, is because you see these blue bars right here, Matt. And I know you know this, right? Blue is support. So there's this area where the bigger funds are selling put options. Dealers, right, they're long those puts, and their hedging flow would be to buy futures, right? So if the market comes down, they're going to be buying futures, which should support the market if we get into that 5,400 area. Right now, we're at 5,445 in the S&P, so we're chugging down that way. And the way that I thought about this market with just regards of how you were framing things is, I think what we all want to do as traders is we want to catch that move that's happening right now. You're like, I got to short this market. I think like I got to do this thing now. And I led off this morning by saying, look, the fat pitch is to wait for the buy signal in this case, right? Because it's very confusing. That market opens very confusing, right? People are going to cover puts and cover shorts, right? Because the market was down a lot. So you want to take some of that cash off the table. That gives us this little fake bounce. You know, there's people are digesting all this. There's all sorts of people chattering on your Discord or your X or whatever is happening. And it's very confusing. So the fat pitch, in my view, is one of two things. Number one, if we hit 5,400, that's where we expect to see all this support. So as a trader, what am I thinking about doing there? I want to try to get long the market. So maybe I'll buy some stock. Maybe I'll try to buy call spreads, right? Fixed risk, tight stops. You don't want to be too risky here. Or selling put spreads. That's another way, right? Because if vol jumps up a bunch, maybe put spreads make sense in that area. So that's what my game plan is if we got down to 5,400, which is clearly what I'm going to wait for now. The other option was what happens, to your point, is there was this negative gamma above. Why that matters for you all is because if we started to rally, the market makers would come in and buy stock, and then we would get one of those rallies where everyone's like, what do you mean the market's rallying? They just rally, they just up tariffs. Don't you know that? And then by the time everyone figures it out, we're at 5,600. So it was very clear. It was like, I'm not going to forecast to you what's going to happen at the open, but we're going to give you if-then statements, right? If you give me 5,400, I'll buy that dip. If we break over 5,525, I'll buy that rally. But other than that, I'm just going to wait it out, right? And I think that's the kind of thing. Set your plan, wait for the market to come to you where you have your plan, and then take action, right? And, I wish I was short 5,000 futures right now, right, with the market dropping down. But let me just wait for it to hit my target, and then I'll kind of react, right? So I think that's really the way that you think about this. And this is all options data based, right? I'd have no opinion on tariffs, if they're good or they're bad or whatever it is. Just show me, how everyone else is reacting. Show me what the options data is, and then we'll kind of like map it out. So if you look at the live take right now, there's two things on your screen that are important. You can see this big blue bar here, right? These bars have been gaining in size. This is dealer support, right? The bigger these bars get, the more supportive the market is. All of this blue zone down here, I think I could draw on this. This is all dealer support, blue support area, right? And this map is updated every 10 minutes throughout the day, so you're getting the latest data. The second thing I want to flag here is this purple line is the flow coming from new options trades. So what does that mean? Every time someone buys a put in Tesla or buys a put in NVIDIA or sells a call, that's negative. We call that negative delta. That's flow. That means that market makers have to short. So the more this purple line goes down, what that's telling you is the options market is pressuring the market lower. Make sense? Mm-hmm. So if we hit 5,400 and we see that purple line stop going down and bounce, what is that telling me? That tells me that, number one, we hit support based on existing dealer positions in the S&P 500. And then number two, it's telling me that traders are now starting to sell their put options or buy calls. In other words, they're betting that the market may bounce. So that would be that'll be my second major signal that indeed that 5,400 area could be a support zone. Gotcha. So we take that live data, right? And we just say, what is everybody else doing? What are the biggest traders in the world doing? If the whole options market starts buying the dip, I'm going to buy the dip too, right? And that's essentially what it is we're watching for.
Love it. Love it. And that, I like it because it's always the if-then statement. Recently, I've been trying to better articulate my viewpoint of the market. And I think almost like a tree root system, every path has a certain probability. And what we're doing here of knowing these key levels, we're trying to identify the higher probability pathways. Because none of this, I think especially in the retail space, there's this mindset that there's a puzzle and it's somehow predestined of what we're going to do, and that's not it. There's the craziest things can happen with lower probability, and then there's the more likely things. And folks, we are not big institutions. We're not big market makers. We need to look for, as Brent referred to, the fat pitches. We're looking for the Shaq-esque dunk layup. We want those easy plays because that's where we're going to succeed, because you're not competing with high frequency traders, people with millions of dollars of data input every single day. It's just not how it works. So on that, speaking of the fat pitches and kind of the easy setups, you guys rolled out kind of two new tools here. And this one on the screen, to my understanding, was one of the most highly requested, because the way we got the idea of kind of trace for the overall market, you can effectively now get that information here. So folks, everything you just saw was for the S&P 500, those key levels of resistance, support, where is it slippery, where is it sticky. But now, as of yesterday, the team at Spot Gamma released something where if you're like, hey man, I don't like trading the overall market, but maybe here's the example of Tesla. Maybe if you're the biggest Tesla trader in the world, congrats to you, because you now have this tool available to you.
Thanks for that. So we have now, and this is the first, we're the first to offer this, and I honestly don't think a lot of the banks have this either. And we're showing you, we call it synthetic open interest. And all that means is we've been tracking where we see dealers and market makers buying and selling options, and we've had to build this database over the last 6 months. So that now when you look at Tesla, for example, what this chart is, if these bars are positive, it means dealers are offering resistance in that area or support. In other words, they're going to be trading against the market. And then if these bars are negative, it means that dealers are going to be doing the opposite, right? So what does that mean when you look at Tesla? Well, the resistance is in the 280 to 290 area. And if you look at the Tesla chart of the last couple of days, that's exactly where this thing topped out. Now what you see is to the downside, there's a little bit of support bar here, right? What this means is somebody's short puts at this strike, right? So there's a bit of relative support in this zone, and Tesla's honestly having a better day than a lot of the broader market by far. But if it breaks this 255, then you want to think that things could really kind of get a little bit uglier. So what this is basically telling you is how are dealers positioned, and you can use that to help overlay that into your trading pattern right now, or your trading strategy right now. So you can look at the dealer positioning in any name you want, any US listed stock. So we could look at NVIDIA and all this stuff. And the key here is understanding how dealers and market makers are likely to react, right, if the stock starts to move a certain way. So in this case, you're looking at NVIDIA. NVIDIA right now is trading at 104, so we're down in this area, right? There's no relative support here, but if NVIDIA starts to rally, this 115 area should be an area of heavy resistance to the upside. So this matters for me. If I buy the dip right in the market and NVIDIA starts to rally, that will be my target price, right? That 114 area. If I'm trading options, I may want to structure call flies around that strike or other positions, right, that take advantage of the fact that I think the stock would slow down into that place. But the other thing that's interesting about NVIDIA is, just as an example, we see this in a lot of stocks, like if the AI story is over, right? If NVIDIA is dead and DeepSeek has killed it all and the AI devastator bubbles pop and whatever other narratives are, right? Where are all the put options? There's just no positions down below, particularly 100, right? There's a couple of short puts. That's why these are positive signals, right? But there's really nothing going on down here. So that tells me that the fuel to for NVIDIA to keep crashing at this point, it's just not there. And if you look at the price action in NVIDIA, every time it gets into the kind of 105 area, it seems to find a bounce, right? Because there's just nothing else to drive it lower. The idea here being that if there's no positions, the market makers are nothing to short, right? There's just, hey, we're hedged. There's nothing for us to do. There's no positions. Who cares, right? So that from a sentiment perspective is really easy, because when you flip through a lot of these charts, if you just see there's no positions down there, well, then what's the impetus to think it goes lower? Even if you don't believe in dealer hedging flows, why aren't the biggest hedge funds in the world like, hey, I'm going to buy a ton of 90 strike puts, right? Because this thing is garbage and it's going to go farther down. Like, you just don't see that, right? So from a sentiment perspective, if the options market doesn't have any put positions, then it's kind of like the move is tired out, right?
Gotcha. And just to clarify, the gamma we're looking at, is it the full chain or is it the next expiration?
This is all of the options positions that are available in options, all in the NVIDIA complex, right? Okay. Now, in this tool, you can break down, if you remove next expiration, if you just want to see pure open interest, if you want to see what open interest normally looks like, right? If you look on your brokerage platform, this is what you see. How many puts are there? How many calls are there? Nobody nets it out for you. So you don't know, did they buy these puts? Did they sell these puts? I don't know what this is, right? So what we've done now is we give you the positioning. If you want to see whether people are long and short puts and calls, now we break that down for you, right? So it turns out, they're short 190,000 of these calls. That's totally different information for you than if you just see pure open interest, right? So that's what the advantage of this new system is. It took us a long time, giant investment, and again, I don't say this hyperbolically. I think we are the only people around that have this data. Maybe some of the banks have it internally, but I've never seen anybody sharing like Tesla positioning in any Goldman note or anything like that. So this is really advanced data. We're kind of like on the cutting edge here of looking at the option space, and so that's why we're so excited about it.
Very cool. I love it. And then also, there's a whole not like you guys aren't stopping there, right? Okay, this is what I was checking out. Yeah, this is really cool. I love this.
Yeah, is the scanner, and if you trade options, this should be immediately identifiable as a valuable tool. Because what we have here is we have IV rank on the y-axis here, so high implied volatility options versus low, and then on the y-axis or x-axis, excuse me, is how expensive are calls. So calls are very expensive in like TLT versus puts. XLY has relatively high put values, right? So How expensive are options? Cheap on the bottom to rich or expensive, and then how are calls priced relative to puts? And the value of this is because you can identify the sentiment, in other words, of a name, right? So let me show you single stocks just to give you an idea of that. So I made a watch list here, and I just bring up the top single stocks. So the sentiment right now in like Amazon, Meta, Microsoft is very negative, right? Implied volatility is very high, and puts are very expensive. That's what this data is telling you. And if you hover over this, you can see the ranking. And this is the ranking is relative to the last year. So even though we're crashing today, we're incorporating everything that's happened in the last year. So this volatility is expensive given everything that's been happening. So that's quite a statement, right? But if you look up here, if you look at NVIDIA or Adobe or MicroStrategy, we see that these options are actually pretty cheap. So why does that matter for you? Because if you're trying to buy options in a name to bet on the market's going to rally, you should look arguably more at like an NVIDIA or a Snow or something like that, because the options are cheaper to buy, right? If you want to play that upside rally. Whereas if you look at Amazon, you're like, hey, I'm going to buy puts to short Amazon. You're paying arguably the most expensive price that you've seen over the last year. Probably that's like the famous term shorting in the hole, right? Nobody wants to pay something that's extraordinarily expensive. You shouldn't buy something generally when it's extraordinarily expensive, right? And that's what this data is kind of telling you. So this is what we call our compass tool. We basically refer to it as a super scanner. You make your lists over here, and you can see exactly how all these stocks are priced, and it allows you to translate sentiment right into actionable trades.
So really, another way to explain it is it's a better way to express an opinion, because like right now, if you generically have the opinion, I want to buy the dip, I want to catch the falling knife, I think it's going to bounce. Okay, the next question is, how do you express it? And here it's wildly different. I'm just picking the top and the bottom. Wildly different to buy Google calls than it is MicroStrategy calls, or I should call it strategy. But just you're saying from the relative comparison to itself, you would, if you had to pick calls in this idea, obviously not telling anyone to do it, it is mathematically better to do it with MicroStrategy than it would be Spotify, Netflix, or Google.
That's exactly right. So, when you have a market like this starting to crash, right, the options values are starting to get quite expensive. And that matters because, like, if we just bring up the sector ETFs, for example, if you look at the spiders for an example, you go, okay, great, I think the market's going to bounce here. I should buy SPY calls, right? That's the first thing that my mind would go to. But the problem is as you can see here, the implied volatility rank for these SPY calls is average right now, right? And we're a little skewed toward the put side. So that doesn't scream to me value, right? Generally, with anything, I want to buy it as cheap as possible. If I buy a house, I want to buy the cheapest price I can get, right? And so in this environment where the market's really spiking, go, is there a better, cheaper way to express that value? Well, look at SMH here, right? It's cheaper because the IV rank is lower. That risk reversal, which is telling us that puts are higher price relative to calls, that's basically telling us that betting on that stock via options, it costs less than spiders. Now, if spiders goes up, SMH is probably going to go up too, right?
Correlated, yeah.
SMH being the semi ETF. They're very highly correlated. Obviously, there's no guarantee here, but we would all probably agree if spiders go up, SMH is going to go up. If not, SMH would probably go up more, is what I would bet, right? Yeah. So I am incentivized in this case to go to SMH and buy calls or call spreads because they are cheaper than spiders. So gotcha. What that is extra edge for me, because if the market starts to rally, what happens? Usually volatility comes in, right? When the VIX drops and vol comes in, the options that you bought, right, they lose value. That's a tax. That the implied vol comes down, it's a tax. I know it's a little bit of a complicated idea, but if you can just think about, I want to buy the cheapest option I can, great. I'm going to go to SMH instead of spiders because the options are cheaper.
Phenomenal. That's so cool. This is awesome. And then I was already messing around with that this morning, but the way you broke down the synthetic OI, very, very cool. So I know some of the people in here probably are like, okay, how do I check this out? And maybe they missed the seminar yesterday. But is it accurate to say everyone on the alpha plan, like as of right now, they're good to, like they can log in and literally use this in real time?
Yeah, Alpha Plan went live yesterday. So you have Spot Gamma Alpha. You have access to this. We actually have an open house right now. So if you go to spotgamma.com, you can try out all these tools. We are in full, try it before you buy it stance here. We want to make sure everyone is empowered by tools and not overwhelmed or just feeling they don't get value. So we let you try it out. Proof is in the pudding. I can throw out as many of these superlatives, I guess, as I can come up with. But yeah, you can go to spotgamma.com and try it out. And most importantly, if you go to Matt, you have a specific link here.
Yeah, folks, if you're looking for it, it's pinned to the top of chat. It's in the description, folks.
Got it in the chat.
Yeah. If you need
any
it,
questions,
that's where it is.
go to that link. Once you click that link and you pop your email in, you'll get access to the open house. You get access to everything for this open house today and tomorrow, and as well as any special deals that we're offering. And I'm told there are a couple floating around out there, so make sure you use Matt's link, and you get access to all these tools. Sweet. Not only that, I just want to say, I realize I talk in kind of a little bit of a complex terminology here. We have a tremendous amount of training tools. We have a Discord room. I do twice weekly Q&As. I have one coming up here at 1 p.m. Eastern time today. I'll be breaking the market down. You can ask any question, what all these different things mean, et cetera. We'll be here to support everybody as they try to navigate these markets.
Absolutely awesome. And I hope I didn't cut you off or anything. I saw that you clicked over to the Explorer view. Is that one more final thing that you want to put the bow on this?
Just along with this, we set up this guided view, which we have stats. If you watched our presentation from yesterday, it's on YouTube, I believe. You can see the stats that back the value of this. Basically, it's predictive of how much of forward returns, like how does stocks move in the future. But this Explorer view allows you to rank 16 different variables against each other, right? So there's all these options metrics, but also in here a couple of things like RSI and Bollinger Bands. So I know a lot of you are technical traders or also incorporate that in your swing trading, whatever it may be. So you can actually incorporate the options data with some of just these basic technicals. That adds another layer of understanding, right? So, we try to make sure that we have a whole bunch of different angles and views in here of metrics that'll just help us succeed, right? We have no dogma here. We're just trying to present data that helps everybody. And if it happens to be a technical indicator, okay, we'll pop that in here, even though 99% of the stuff you see here is options-backed information.
Absolutely love it. Well, there you have it, folks. As Brent was referring to, you kind of do have this opportunity to give it a little bit of a test drive if that's what you're interested in. So you guys, if you watch any of my shows, you see me literally using this every single day. And it comes back to how I started this off is I believe as a retail trader, the only thing that you can examine that has a bit of future indication is the options market. Inherently, everything else, your technicals, your price action, I'm not saying it's not important, but I'm saying it is inherently backwards looking. It's data that's already played out. Well, when you track the options market, it's what people are betting on in the future. So the fact that we already had this and now we have more tools, I'm very, very excited to start using it. And folks, like I said, pinned to the top of chat in the description of the video. Before I let you go, Brent, any final concluding thoughts on the craziness of the market right now? I see you bring it back over. It looks like we're kind of at that support zone, the positive gamma.
Yeah. I would just say this, it is a trader's market, right? And so we've seen a lot of times over the last 1 to 2 weeks where people thought the bottom was in and they tend to say, hey, here's a huge market rally. And that's the sign that this is all over. But things are going to be inherently unstable now through at least April options expiration, which is about 2 weeks. So there's going to be some tremendous rallies in and amongst these big sell-offs. And I think those rallies, you want to make sure that you're taking some off the table and positioning for large swings, right? From a sentiment perspective and from a positioning perspective, we're unlikely to clear a lot of this volatility now until at least April options expiration. So, stay light on your feet, make sure you're going with those big swings and be prepared for some of those nasty rallies, right? That can, like we saw yesterday, right? We're up 2.5%. The news comes out, we're down 2.5% in 15 minutes. So, there's gonna be a lot of those swings. And lastly, I would say, Matt, I've been tracking, I see your tweets of all the impressive returns you've had lately. And so we're really proud to be just a little part of that. So thanks, man. And kudos to you for putting up some big numbers there.
I appreciate that. And just, hey, every once in a while, a blind squirrel can get an acorn every once in a while. I think that's what's going on. No, but obviously very, very helpful with the options. And I do appreciate your time. Very fortuitous that we synced up on this day, because I think there's a good chance that this day is the most crazy day of the entire year. Like, it's very rare that you get a 3-4% sell off. So the fact that this came together as quickly as it did, obviously appreciate your time, and shout out to the team for once again rolling out an impressive product. But once again, we'll be talking later. I'm excited. Maybe we'll come back April, May, maybe the May monthlies. We'll be talking about how we're at a new all-time high. You never know. It's that crazy of a market.
You definitely never know these days, man.
All right. Appreciate it. Have a good one. Thank you.
Take care, everybody.
Bye. All right. Let's switch. Where'd you guys go? All right, folks, obviously I have it up here. Well, you guys kind of see it. This is the screen Brent was just using. I changed my colors to just make it a little bit more vibrant. But right here, this is the positive gamma he just had on his screen. This is the negative gamma. If we do pop, just be careful. And then if you have a tough time navigating to what he was just showing us, you could look in scanners. Scanners is this new view. I kind of was looking at my own version of the Mag 7 of seeing strategy versus Google. Obviously upside potential, but some of them are very expensive and some of them are pretty cheap. So it is an interesting way to express your opinion. And then the way we're using Trace, where everyone's like, okay, like where's the support, where's the resistance? And we used it and it was nice for the S&P 500. Well, now you can use it for pretty much anything. So let me, I don't know, we'll add a tab here, or let me go to, I guess, Tesla, or I don't know. It's just, we could use whatever one. But if you go to Tesla, bring that up. We're looking at Tesla, and then right here, here's the synthetic. So where is Tesla at right now in real time? It's around 267. Sorry, 267. 267. So we are at roughly where my cursor is right now. There is support at 255. And then if we do somehow pop, it looks like there's going to be running into some resistance closer to 280, 285, 290. So kind of think about it as a ball. Like it's hard for the ball to go up, but then when it does break, it would easily fall. So it's like a lot of potential energy that turns into kinetic. So probably the easiest way to picture this of what it means for price is literally like a ball on a mountain. Like it's tough to push up, but when it does, it can easily fall. Same thing. It's easier to fall backwards. It's a fight to the upside. So that's probably a quick little mental framework you could use that might make it a little bit easier to like kind of understand like either what is or isn't happening. Just because we're here, we might as well look at MicroStrategy. I know that's a pretty popular one. MicroStrategy is trading at what? MSTR is at 295. So MSTR, where was I? 295. Looks like I need to zoom out a bit. Right where the cursor is, it looks like there is some support at 290. And then if it were to push, there's quite a bit of resistance up here at 320. So just a very quick breakdown. But if you're looking for more of like a clear, like data-backed explanation of all this stuff, it is on the Spot Gamma website. They put it on their socials, track them down on X. There's a full-fledged seminar. They just released this yesterday. So like I said, if you want like all those nitty-gritty details, I would highly recommend checking out that seminar. They put it up on their YouTube page. I think it's up on their Twitter page. It shouldn't be that difficult for you guys to track down. Speaking of that, we should turn our attention back to the market, where the Mag 7 sold pretty heavily up until about 10:15, and since then we've just been going flat and then going over to the S&P 500. We've actually been picking up since 10:15. The delta is actually now more constructive. And where do we go to? So basically, we were at support, hit resistance, tested support, tried to bounce, broke down, puked to the next level. And right now it's trying to get a little bit of a recovery, but let's just see, because we are seeing a bit more of a repair going on in real time right here. Here's a look at the S&P 500. I wouldn't be chasing this to the downside, because right now options are actually trending back up, and the Mag 7 more so trending down than anything else. The Mag 7's getting hit, but then the SPY is looking like this. So not my favorite time to chase. Well, really, I don't think you should ever be chasing. So even though, if anything, if we find support here and it starts to bounce, I actually might take a little bit of a long position in the futures market and see if I could ride this back up. So that's what we're checking out. But once again, if you are interested in this, there is a link to this whole new product. Currently, they are offering 50% off any new Spot Gamma Alpha annual plan. So you could get 50% off the annual plan. And right now, there's like kind of a freebie testing. So no matter what plan you have, you can check out those new tools. So just want to call that out. Once again, pinned to the top of chat in the description of the video. And let's go back to the flow to see what in the world is going on, because this is kind of going to be a decisive point. Do we hold here? Does it bounce out of this, or are we about to get this little fake out breakout and a vomit lower? What will it be? What will it be? What will it be? The Mag 7 flow is not looking the best right now. Tesla popped, gave it back, now going flat. Same thing with Netflix. Popped, gave it back, now going flat. How is Bitcoin looking? Chilling at 82. How's Vol looking? Here, let's go to the 3 minute. Let's just clean this up a bit so we can See what the fuck this is all about. So both the SPY and the Qs broke down below their 15-minute ORBO. I forgot that I had those up, but that's what these blue lines are. They are the 15-minute opening range, the high and the low of the first 15 minutes of the day. The SPY broke, and that was actually a pretty decent trade. The Qs broke, but it's a messy trade. We broke down, bounced back up. We broke down, bounced back up. We're breaking down right now. So even though we're breaking to the downside of the range, it hasn't by any means been a nice trade. Has not been a nice trade. Here's Netflix. Here's Vol. I am not. The only green thing I'm seeing on my watch list right now is volatility. Apple is getting smoked 8%, Tesla 6, MSTR 6, Palantir 4, Nvidia 5, Broadcom 7, Meta almost 8, Rum 4, Netflix. Netflix was actually the one that was fighting the most, down only 1.6, which, I mean, coins down 8. Dude, there's a lot of blood. Right now, it looks like Amazon's down the most on my watch list, almost 9%. Oil's getting hit. LRCX, IBIT, dude. Blood in the water. Blood in the water. The Mag 7 Delta just hit a fresh low. S&P 500 felt Delta potentially turning over here. Let's see. It had a nice push up. Definitely a little bit of divergence. Price went lower, even though the Delta got higher. So the options market is basically saying, hey, we're not really agreeing with this low right here. The low at 1024, you could see that options has been trending higher as price went lower. So a little bit of a mismatch, worthwhile to pay attention to. What is agreeing with this sell-off is just the fact that the Mag 7 just keeps going. Like, look at this. This Delta is just vomiting. So little bit of a tiny mismatch right now. We're seeing not as aggressive bearishness in the S&P 500. We are seeing it, though, specifically in the Mag 7, which, I mean, Apple is actually attempting to recover. Where's Microsoft? Microsoft was getting a pop, kind of giving it back. Meta's getting absolutely dunked on right now. Absolutely dunked on right now. Do you think you can make a video on SpotGam and show us how to use it? Yeah, it's already in the Discord. Already in the Discord. Intel, Costco, Coca-Cola. Yeah, the consumer staples and the consumer discretionary sectors are actually holding up pretty fine. So anything that's in XLP, XLY, consumer staples and consumer discretionary, those are both actually, like, those sectors are looking fine right now. Those sectors are definitely looking fine. It is tech that is taking a hit, but so is healthcare, so is energy, so is financials. So it's kind of sector specific. I mean, overall, there's quite a bit of red. I mean, if you look at, here, let me show you this. This is a free heat map, but most of it is red. It's dominated by tech, consumer cyclicals, financials, energy, but utilities are actually in the green. If you look at utilities right here, consumer defensive, that's going to be a mixture, but most likely your consumer staples, Coca-Cola, Pepsi, tobacco, there's some green there. Actually, telecom, I guess AT&T, Verizon, T-Mobile, they're doing fine. Some of the healthcare plays are doing fine, but healthcare as a whole is getting hit. But I do see some green there. But yeah, the fact we're going down so much because tech is so dominant. Financials are so dominant. Energy so dominant. When you have tech, financials, and energy all getting hit, yeah, the market's going down. Even if you have other sectors that are positive, it's just by their weight, they just are less impactful. So even though we have this green over here, I mean, Microsoft itself pretty much wipes that out. They're the same size. Like, these things are the size of their weighting in the S&P 500. So really, the little bit of positive here you get from these really consumer defensive plays are getting completely wiped out by energy here or Apple by itself. I mean, Apple by itself is pretty much as big as this entire sector. So that's why you're seeing some green, but not really in the overall market. It's just getting a little bit zapped. A little bit zapped. All right. I definitely a contrarian would not mind playing a breakout recovery. I'm looking for this trend line. Of course, I want it to align. I'm not just going to randomly do it. But if I see options pick up more, options were really getting beat up, and then something clearly changed at 10:13. right here. You can see that puts were no longer being purchased. So right now, this put delta is no longer dropping. So you're having the big players in aggregate, they're no longer expressing their views that they think it's going to aggressively go down. Look at the put delta is now effectively flat. And if anything, it's kind of the call delta has been picking up since 10:04. So ever since the change of the hour, we're actually seeing a little bit more aggression on the call side than on the put side, because I'm seeing put delta trend up and the call delta trend up. Once again, though, that's just the S&P 500. The Mag 7 is a different story. Call delta is dropping and put delta is dropping. So if this trend were to change, I think we could actually see a bit of relief, and that's what would allow the SPY and the Q trend line to break out to the upside. But also, you might want to be paying attention to vol over here. Vol keeps picking up. But as of right now, I haven't done anything today. Obviously, I have not made any options trades. Let me show you this. I have not made any futures trades. Actually, speaking of futures trades, let me get this set up just in case I do want to make a futures trade. 63. Okay, I just needed to delineate between the Apex accounts and the take profit accounts here. Just a quick little delineation. It is, yeah, okay. I did do it properly. Hoping for a long 2-year recession. Why would you want a 2-year recession? Jesus Christ, that is sadistic. A 2-year recession? And you're hoping for it? That's kind of a dumb fucking thing to say. That's kind of a really, really fucking stupid thing to say. You're hoping for a long recession. That's actually fucking idiotic, but I guess to each their own. That's the interesting thing about free speech is it does allow people to say dumb fucking things. A little bit of breaking news here. Met with the Israel U.S. Secretary of State Rubio. Okay. France's President Macron urges companies to pause U.S. investments. France's president, Europe must react to tariffs industry by industry. This is once again France's president. The response to Wednesday's announcement of U.S. tariffs will be more massive than the previous response. Remember, Trump said anyone who takes countermeasures, he's going to amp it up even more. So I would be kind of surprised if they do announce these countermeasures, but we're going to see. We're going to see. Dude, Apple's turning south again. Which way? The Mag 7 just looks awful. Like, that is so bearish. It's just nonstop bearish. Well, I'm getting confused because the SPY's actually picking up right now. The SPY's delta has already climbed back up half the range. One of these is going to be right. One of them is going to be wrong. Either the SPY is going to turn and start to look once again like the Mag 7, or the Mag 7 is going to turn upward and then start to look at like the SPY. But obviously I am not a fortune teller, so I can't tell you who's right and who's wrong, which means just wait. Just wait. Imbecile, time to short this country to crap. Okay, good luck with that. See how that works out for you in the long run. And the trick there is it won't work out for you in the long run. Anyone who ends up being a perma bear in the stock market, they always lose. They always lose. Why am I looking to go long? Because we're almost at the extent. Like, why am I looking to go long? Because I'm following big money. What is big money doing right now? Big money is no longer expressing a view that they think the market's going to go down. Obviously, the next update might change that and the bar might drop and I'll change my opinion. But you always want to trade on the side of big money. Big money is what moves the market. So right now, that question is you have recency bias. You're saying, oh, we're trending down. So because we're going down, you're expressing the opinion that we have to keep going down. That's not true. Eventually you end up finding a bottom. Eventually you find tops. Like, you find these turning points. So it's just more of like having the patience to wait for it. But if you're going to go short, I mean, we're already kind of far away. We already broke down. So I don't want to keep chasing it. That's a stupid fucking trade. So then the option is, okay, either wait for a turn or wait for maybe this to turn and all of a sudden big money to express the view that we're going to keep going down. But I mean, all I can tell you is because the data is screaming in the face that they think it's popping. Now, once again, this might break down and look like the Mag 7, and yeah, then go for the short opportunity. But on the flip side, you might have the Mag 7 turn to the upside and start looking like the SPY. I'm telling you right now, I have no idea who's going to win this battle. I have clearly no idea who's going to win this battle, which is why I'm just kind of waiting for the data, the underlying data to agree with price, and then seeing if you could take advantage of a low risk opportunity. That's how you do it. How do you determine when the minute charts are bullish or bearish? The same way you would on any time frame. Is it trending up or is it trending down? I mean, I'm on the 3-minute right now, but anyone that has eyeballs would look at the 3-minute and say this is bearish because we are trending down. It wouldn't be any different on the 5-minute or that, like, your analysis wouldn't change based on the time. Like, you're either using a time chart or you're not, and then you're defining the trend for that particular time period. But it's not like you would do a different analysis for the 1-minute or the 5-minute. It's just when you use that chart, that's giving you information on that time frame. That it's the same as the daily. It just doesn't. It doesn't alter. I don't know. I don't really get the question. You failed an eval. I'm sorry, man. That's a bummer. What egg? What are you going on about? That has nothing to do with the market. SPY, fresh lows. Q's fresh low. Is the SPY... See, it's something weird's happening. The Mag 7 is still showing quite a bit of weakness. Mag 7 is getting hit. The SPY, on the other hand, is actually going up. What are they doing? People, for whatever reason, the put delta is not going down. It is on the Mag 7, but on the S&P 500, people are not getting puts here. If anything, they're actually getting some calls. So as of now, these guys are wrong. Actually, literally right now, more calls are... What is happening here? Yeah, calls are picking up. Little bit of put drop here. I'm confused because this is I mean, you could see the difference. This is wildly different. The Mag 7 is saying a completely different story than the S&P 500. So either these S&P 500 players are wrong or they know something, or vice versa. It's kind of tough to delineate of who we think is right and who we think is wrong. From a price structure standpoint, obviously the bears are in control since market open. Lower highs, lower lows, lower highs, lower lows. Vol is picking up. From a momentum perspective, the bears are in control. 5-minute, 10-minute, 30-minute, 4-hour, 5-minute, 10-minute, 30-minute, 4-hour, all bearish. So price structure as of right now and price momentum as of right now are controlled by the bears. Looking at the options market, the Mag 7 is clearly a bearish options flow. The delta is dropping, which is bearish. And then looking at the S&P 500, it was dropping, and then for whatever reason, it caught itself at 1013 right here. And since then has actually, the delta's going up. And what this was people just collecting their puts, like collecting their money, and then the put delta rose and they haven't been repurchased. So that's a bit confusing to me. A bit. When should we buy? Buy whenever your strategy tells you to. Thoughts on prop firms, scams? Some of them are scams. Some of them are awesome. Kind of like anything in life. When you look at entire industries, yes, you're going to find scammers within the industry, and then you're also most likely going to find quality companies in the industry. So you can't say that they're generically scams. There are scam prop firms out there, and then there's what I would consider to be like legit prop firm businesses out there. So it's just find the right one. Definitely find the right one, I guess, is what I would do. Well, it's honestly what I feel I have done. That's why I kind of just stick to the main ones, the most popular ones. There is a reason they're the most popular. They're the reason they've been around the longest. And maybe some of the new ones are going to be good, but they just don't really necessarily have the track record. Okay, at this point, kind of watching 5,400. We're, like I said, laying out these levels. We opened up, we tagged support, ripped a resistance, rejected, tried to break down, fake out bounce, puke, retested it, puke to the next level, dance, failed breakout, broke this level once again, and now it is just a puke down to here. I don't see much in the way of stopping this market from dropping all the way down here. All the way down here. Look at that. Just getting walked down. Getting walked down. Jesus. Not even really good opportunity. Like, it was just so dramatic. I mean, I guess this short at 1033 could have worked. Maybe this short at 1042. Maybe this short at 1045. But, like, this is just a dagger. Look at, like, how perfectly, like, this EMA is just not moving at all. When inflation is clearly coming. Oh, I mean, if you think inflation is clearly coming, I'd be curious to, like, understand how you came up with that. Generally, when you have absurd confidence in anything in the market, that's not warranted to be, like, I find that that's, like, legitimately problematic is when people are like, nope, I'm definitively sure that my take is the right take. So right now you're saying that you have a take that inflation has to be rising right now. Does it? I don't know. This is the guy that told you to buy AMC. You realize AMC went from $5 to $72, right? So are you just trying to point out all the times I was right? This is the guy, like, Sergio, you realize that AMC went from $5 to 72. As in, I was right. I'm so confused. Like, you're trying to say it as like, oh, I got him. He's wrong. But it went from 5 to 72. What is the price now, Sherlock? When did I ever say to invest in it? Ever. I think I always explicitly stated that it was a trade, and the trade was right. I was right. Wait, are you telling me that everything you've ever bought, you're still in? Because if you are, congrats to you, but you're not a trader, and the people in here are traders. They're actively trading. So, once again, like, I guess I'm confused. I was right. Very, 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 very much right. But I understand that maybe, like, your brain can't compute that because you do seem pretty fucking stupid. So, I mean, I guess that's you. I have a feeling that you live a very, very sad existence. I have a feeling that you are a net loser of a trader and an investor because you clearly just don't have the mental competency to, I guess, handle what's going on in the market here. But it's okay. I mean, there's always people that need to run around this world wearing helmets, and you just happen to be one of them. But, I mean, you're doing your part. You're ensuring that the local helmet salesman has a person, a client like yourself, to always sell those helmets to. So, really, you're putting the food on the table for that family who sells all of them. So, I think you're doing your part. I think you are. Jesus. Some people legitimately are too stupid to trade. They really, really are. Like, I think most people could trade, but there is a certain subsect of the population that, like, very honestly, just does not have the intellectual capacity to handle this. And we're seeing some of them right now. All right, how's the Mag 7? Mag 7 maybe bottoming. This is, I don't know, before we were flat, then it flat, and then it started to puke at 1033, and we got another wave, then it went flat, then it puked again. So who knows? If it is a bottom, this is what it would look like, but all the other times we thought we were going to bottom, puke. So just be careful. Gee, you're such a princess, easily rattled, grow a pair, boo. That's a weird response for just, I think what you're trying to look for is that you were wrong. I think that's what like you're trying to comprehend. But once again, serious concerns about your intellectual capabilities at this point. Serious concerns. Nice double chin. Oh, is it a fat person? Well, that would be even weirder. Okay. This is just another proof that it takes all types to make the world go round. And I think all of us can use this as a sobering reminder that life could be worse. It could be worse. You could be Sergio. You could be a dumb fuck losing money. I found this. Moon G. Did I not even spell Moon Gang right? Oh, yeah. Dude, The White Lotus is an amazing show. I absolutely love The White Lotus. All right, VIX is still rising. Kind of getting close to 30 here. Kind of getting close. Apple's picking up a little bit. Was down the most on my watch list at one point, but now Coinbase is actually down the most on my watch list. Down 9%. Down 9%. Tesla's down 7, MSTR is down 7, Palantir's down 5, Nvidia almost 7, Broadcom, everything, all these big tech plays puked right into it. Netflix kind of flat, was green at one point. Good for Netflix. Where's MicroStrategy? 289. 289. All right, here's a look at the flow. The SPY's, I'm telling you, folks, something is weird here. The SPY is just picking up. While the MAG says something's mismatched. Either we're going to capitulate if the SPY turns south, or we're actually going to rally if the MAG 7, if this really is the bottom here. Oh. What is it? What is the play? What is the play? Oh, brother. Oh, brother, oh, brother, oh, brother. Which way is this going to snap? Which way is this going to snap? Are we capitulating all the way down to 5,400 where we know there's a key psychological level, quite a bit of support? I mean, as of now, I believe the lowest on the day was 5,421. 5,421. So there's potentially another 20 points there. That would be about $2 on the SPY. As of right now, we are down 4.3% and 4.2%. VIX is still climbing though. When the VIX is climbing like that, that doesn't give you the most hope of an immediate turnaround. Obviously, I'm watching this trend line for a potential entry. We got pretty hardcore rejected at 1033. But watching this, VIX is still climbing. How's Bitcoin doing? How's the dollar doing? The dollar is just getting annihilated. Dollar's getting annihilated. Vol's going. Q's. That's pretty red. Are we falling over? Is this the setup for the puke down to this level?
Order submitted.
All right, these are just to pass this eval. And then these ones, what's that risk? So I'm trading on the take profit here. Once again, these are just the evals. I just need to trade a couple more days. So I put that trade in. I think I need, because yesterday I had like a random amount of profit that was a little bit more than I was supposed to have. Let me actually do the math on that. 1750, divide that. 3,000, 500. Yeah. So just see if I was trying to take that breakdown trade. Once again, these are evals. I want to be very, very clear. I don't have 25 performance accounts. I have 20 performance accounts on Apex and then 5 performance or eval accounts on Take Profit. And that was this first trade that I just put in with a pretty close profit target, just because why not? Just to see if I could get it. This bounce is a little surprising, but to clarify, that trade executed on eval accounts, while I am trying to see if I want to take this trade here. I mean, it is minimal risk, 80, risking 25 points. That's only a $500 risk. But how does the flow look? How does the flow look? By the time this flow loads, the trade might be gone. But I'd rather miss it than get into a trade I don't like. Oh brother, 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 oh brother.
Order filled.
All right, when it just broke that wick, I got in with apparently no strategy. Where's my risk? Where's my reward? Why did it disappear? It's there on these ones. What is going on? But it's not on these? I don't have any pending orders? Well, that could be problematic. Well, the die are in the air and we have no idea where it's going. Basically, I was just saying, okay, it popped a little bit. There's a lower high. Maybe it does puke. All I know is I have well-defined risk. My risk is very close. And then also, I think there's a very real shot that SPX can still get down to 5,400. So I'll set an alert at 5,405, add alert. Okay, so the alert's created, but I'm looking roughly for this zone. And my thesis is that if the SPX does get down there, obviously highly correlated with the Q, so I'd expect that. I also see vol still picking up. So that's why I'm in on this trade. That is why I'm in on this trade, and I'm just hoping that it doesn't revert all the way back up here, which I should probably put a stop in. I'm short buy stop market.
Order
right.
submitted.
I put my protection in just in case there's a random bounce that I don't want to get into that mode where I get tilted because it goes against me, and I'm like, no, it's going to come back. No, it's going to come back. No, it's going to come back. I just need to put a stop in to basically protect myself from myself. So we're going to see. We're going to see. Obviously, price structure is bearish. Lower highs, lower lows. The Qs, lower highs, lower lows. Bearish, 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 bearish. Bearish, 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 bearish. And we knew the Mag 7 was bearish this entire time. What I was waiting for was either for the Mag 7 to pick up or for the SPY to break down. And I saw some weakness. This is pretty much where I got in the trade. I was like, okay, like maybe it's actually coming back down. But obviously, the future price movement is going to be based on what traders right now decide to do. Are they going to be bullish or bearish? I do see the vol picking up, but in all reality, trading always comes back to, can you get in with minimal risk? And I saw that pop, didn't want to chase it down, saw the pop that was a lower high, and I was like, okay, I could risk either this high or that high. So it's more of, I'm taking a shot with well-defined risk that if I happen to be wrong, okay, shit happens. And really, I was just kind of wanted to get this trade locked in on these eval accounts, which they got close. It got to 58. These orders are at 55. And then, of course, it bounces right against it. Well, maybe a triple bottom here. Bottom, bottom, bottom. I was looking for a little bit of a waterfall once again, with the major idea being the next clear level of support. The next psychological level is about 23 points lower. That's a good chunk. That's a good money-making opportunity if it were to happen. But price has seemingly stalled out ever since 1051. Seemingly stalled out. Not really doing anything. Mag 7, actually a little bit of an upswing. S&P 500, a little bit of a downswing. So I guess they're now reversing course on each other. Reversing course. Oh, I hope this doesn't just randomly wick me out, go up, tag me, and then puke anyway. I'd be pretty upset, but it is what it is. The longer you trade, eventually you're going to get those wick out situations where it seems like the market is coming for you, hits your stop, and then does it exactly what you want it to do. But we'll see. The market really did, ever since 1053, seem to pause here. I took this trade because I saw the lower high. So I was like, oh, the trend's continuing. And I saw the SPY started to go to the south side in options. And most importantly, just to stress this, I liked, like, it was well-defined risk. It wasn't like, oh, like I'm going to let this go completely against me. It's like, okay, I'm just anchoring it there. And if it pukes, I get to move my stop to break even, and then I get a free ride. I honestly, if it snaps 40 right here, right there, 40, maybe like 35, somewhere in this zone.
Order canceled.
Okay, so those ones just hit, locking in 285, 275, 275, 275. So locking in a little bit there. I don't know if that's, I might have done my math wrong. I might have needed it at like 53 because I think these were supposed to be 500, but whatever. I'll worry about that later. That trade's done, locking in about $1,000. Once again, these are eval accounts. They're not yet performance. I just need to trade the appropriate amount of days. I believe I have the profit that I need, but I'll figure that out. But you have to trade them for 5 days after the or including getting your profit to be able to pass the test. So that's the order you just heard. And then you see these ones are riding right here. And we're going to see how this goes. Like I said, I would love to de-risk the situation. Love to de-risk it. I wanted to see 40 snapped, just so I can move my stop to break even. But part of me actually wants to move my stop down to 86 because at that point, I'm only taking on a 15-point risk, which is only $300. So if I happen to be wrong, if I happen to get wicked out, it's a very manageable situation. I feel like that is the smart move right now. Okay, so I move my stop. I'm short at 71.75, and my stop is obviously here. Okay. We just hit that. Kind of bouncing. You know what? Let's just do a free lotto play. Fuck it. Lotto play. No, worst case scenario is I'm stopped out for break even. And the reason I could do that now, when previously, if you've been watching my trading, I couldn't do that, was because of that difference between the realized and the unrealized buffer. But the fact that I've now maxed out that buffer at 2.5K means I can go back to a little bit more similar to my normal trading strategy where I get to do this stuff. And think about it this way. The best way to explain it, especially if you're new here, the best way for me to explain this is imagine you're fishing, and like the goal here is when I first put on the trade, that's my max risk. When it goes a little bit in my favor, I move my stop to break even. When you do it, especially when you're aggressively moving your stop to break even, you're going to get wicked out a lot. You have to be mentally prepared that a lot of your trades are going to be nothing. They're going to be zilch, nada, goose egg. It's going to just wick you out and like, you're like, okay, whatever. But every so often, maybe once every 5 trades, maybe once every 10 trades, whatever it is, you're going to catch an actual legitimate like big move, and you get to ride the trend, ride the trend, ride the trend, ride the trend. So with this, okay, if it wicks me out, that's a bummer. It's coming back against me right now. I don't want it to. Of course, you take every trade wanting it to be like a good, awesome trade. But you also have to like realize that when you are aggressively moving the stop, it is more likely than not, especially if you're super aggressive with it, that you're going to get wicked out. And that's just something you have to stomach. That is just something you have to get used to. That's if you're trading in this particular style, and I'm not saying this is the only way to trade. I'm just saying when I trade these accounts, that's exactly how ideally I want to trade. It's just something you mentally have to get used to. And you're like, okay, got wicked out. But the point is like the way you're doing this is it's never damaging to you. And okay, let's say in a series of 10 trades, well, let's say the first 2 are just bad entries and it comes against you. So you lose a unit. So you're down a unit, down another unit. Then 6 trades in a row are just nothing. You get wicked out, no damage, no harm, no foul, like no gain, no nothing. Then maybe one of them, it's like this, and you follow the stop and maybe you gain a unit. So in this series of 9 trades, 6 of them are bust, 2 of them are losing a unit, 1 of them is gaining a unit. So you're down in 9 trades, 1 unit. But with this methodology, you're putting some skin in the game for if there is a big move, you might get a 5, 6, 7, 10 unit return. So even though you're looking for that one move, you never know which one it's going to be. So the idea is to keep like afloat, waiting for that perfect move. And then you're always attempting. And then if you could survive the game long enough, eventually you find that nice big winner move. So it's a lot more of, I suppose, just like this like fishing methodology, if you will. So right here, if I wanted to, I could move my stop to right here, this little wick. And honestly, if this fails, if we make a fresh low, it cracks 20, I'll probably use whatever this high is. But actually right now it's showing enough of a strength. And even this, like my stop is actually below this trend line, which might be natural resistance. So if I get wicked out, I get wicked out. That's just life. That's life. But I'm trying to put myself in the game for like, if there is that big move, that I'm able to catch it. That's the entire goal. But literally, as we're talking about it, you're going to see, it seems as if you're about to see the more likely scenario of basically just your stop at break even getting hit. But once again, that it's a free lotto ticket play. It's a free lotto ticket play. So that's generally how I approach these. At first, it's a little bit frustrating when you have to build out the buffer, but whatever. Once you build out the buffer, and the more buffer you have, the merrier. Mag 7 almost hit a fresh low on the delta. SPY did puke, but now it's actually picking up a little
Order
bit.
filled.
Speaking of that, right here, just got out, break even trade. That's the whole point of these lotto ticket plays. And if I didn't, I would now legitimately be red. And maybe this is turning around. You don't know. Why not get wicked out and profit? Not zero, because it doesn't matter. Like, what's the difference of plus or minus 20 points? I don't know. Like, that's more of just seemingly a psychology thing for you that you want to see green. But in reality, like, when you're trading at like plus or minus $10, like whatever, it's commissions. Like, technically, my stop was slightly green. Like I moved it a tick in my favor. Actually, the SPY might be having a legit breakout right now. Do I want to take this trade? Hang on. We're seeing an actual shift right here. Look at Vol for the first time today is actually getting smacked, like notably smacked. The SPY's trying to get a trend line breakout. The Qs, how far down did we get? We got as low as 15. So we didn't really hit that target. But we have either bearish profit takers early or we have bull stepping in early. But this is our first trend line breakout test of the day. Maybe it's a fake out breakout, but I'm now seeing vol get hit. And once again, that's a really good example of why I get out, because right here, I would be down by like 40 points. So that actually, like, granted, I didn't make money. Well, some of them made money, $5, whatever, 25, minus 5, like, whatever. It's just it's a scratch trade. But this is why I did it, because I was in at 71. I would be down 40 points. These would all be down $800. That shows you right there in real time, failed breakdown, and we kind of just recovered. We got this trend line breakout. If anything, that would have been a baller play to actually switch it, but I just didn't realize how much vol was getting hit. VIX is up 37%. Yeah, well, it was. Now it's up 32. Was up 32. I'm wondering if this is actually gonna be the real thing. We just had this perfect lower highs, lower lows. Like, is this the trend line switch? I would have felt more comfortable going long here if we got a lot closer to 5,400. Of course, there still might be a little bit of downside room, but the Mag 7, the Delta reading for the first time today, putting in a higher low. See how price came down and it's divergent. Price made a fresh low, but the Delta didn't. So that's the first time we're seeing that on the Mag 7. And then the SPY, same thing. Clearly, we're now having higher highs and higher lows. So something clearly just shifted. It shifted earlier today in the SPY, I would say closer to 1025, but it just shifted right here in the NASDAQ. We put in a higher low even though price went lower. And on top of that, we're getting the trend line breakout on the SPY here. So, like, I don't know. If you're a person who doesn't mind attempting to catch a falling knife, I mean, your risk is well defined. It's just the intraday low. You're betting off of that. You're betting off of that. I wouldn't mind trying to go long here, but I don't want to just chase it. I'd rather see a pullback, put in a higher low in price. So that's kind of what I'm looking for right now. But like I said, I'm not just going to randomly chase, because it all comes back to, can you currently stomach the risk? And right now, if I'm in at 810, my risk is literally 90 points away. That's a huge, huge risk. I'm not willing to take that risk, which means if you're not willing to take the risk, you don't take that trade. So if anything, I'd wait for the pullback. Ideally, it's a higher low, and then I could take advantage of the swing back up if it exists. I don't know if it will. Ideally, it would be something like we drop, we pick up maybe off of a key level, and then we turn around, and whatever that swing low is, that's my new risk point. Well, and it literally might be this right here. I kind of wanted a deeper pullback because that was quite the pump. I very much wanted it to pull back at least half this distance, like 70, 80, somewhere in here, and then a recovery out of that. That's a very shallow pullback. Very shallow pullback, but that might be the trade. I was just looking for something a little bit more, and because once again, I'm just not really comfortable taking this risk. I mean, I guess technically I could risk 31, but that doesn't really help it at all. That's still quite a bit of risk. Quite a bit of risk. SPY's trying to hold this breakout, and the Qs are testing the 5-minute. All the momentum is still bearish. All of the momentum is still bearish, and we still have this upside gap fill to 554.81. That is the low from yesterday, so there's a clear upside gap fill in the chart. Do I think that's going to get filled today? God, no. But I do think given enough time, the SPY will trade back up to 554.81. Once again, the low from yesterday. On the SPX world, that would be 5571. 5571. Oh, how do I want to play this? Mag 7 potentially picking up. SPY potentially picking up. How do I want to play this? Wow. Vol is expensive right now. Vol is expensive. All right, the dollar's picking back up. Vol's coming down. Is this just like a little fake out recovery, or are we actually going to get going? All I could tell you is the call delta is rising, and so is the put delta. 0DT puts have been flat, and really all expirations slight tilt to the upside. But what I see is from 1021 till now, the call delta is rising. With respect to the Mag 7, call delta is finally turning back around, and so is puts. Ever starting at like 1110. We're starting to see maybe a potential bottom form here. Potential bottom. The SPY, as of now, holding its breakout. If you took that breakout trade, obviously you got to stick to your risk because you just don't know if you're going to be right or wrong. And then I'm looking at the NASDAQ. I guess I could use that. Oh, do I really want to use that? How much? Like that's 40, that's 800. That's something I could stomach. It wouldn't be ideal. It wouldn't be ideal. All right, fuck it.
Order filled.
Fuck, I did the same thing of the order cancels order. Where are we at? 95, so 94. I am now long sell stop market. All right. So I put in my protection. This is kind of the max risk I'd be willing to take. Like I said, I didn't want to chase this up because my risk point was so far right here. I mean, I do see a couple wicks. I see this trend up. I mean, if I wanted to be aggressive, I can move the stop up to maybe 17, 14, save myself about 20 points. If I'm wrong, but obviously the more aggressively you move your stop, the more likely you are to get stopped out. So there's kind of a balancing act of, yeah, you want to manage your risk, but you also want to give the trade an actual chance. Like, for example, you could be hyper aggressive and move your stop to break even the second it goes like 2 points in your favor, but the odds of you getting stopped out are extraordinarily high because the only way you don't is if you put on your trade and it like never goes against you. It just like exclusively goes in your favor. So even on that little pop right there, if I moved it to stop even, I'd already be now stopped out. So the more aggressively you move your stop, you are by definition lowering risk and taking on less risk, but then the chance of your trade working is less. So as you lessen your risk by aggressively moving your stop, the trade-off there in the world of trading is always just going to be various trade-offs. The trade-off in that situation is the fact that you're going to get stopped out a high percentage of the time. So it's just all a balancing act. It's all a balancing act. The dollar picking up a bit here. VIX. Hang on, I'm seeing some announcements come across. Oh, that went against me. I just, for those of you keeping score at home, I am long at 44 and it's down at 31, 34. So I'm down by about 10 points. So slightly red. And I'm just risking whatever that swing low is, basically saying this breakout's going to hold. And if I'm wrong, I'm getting out at like the bottom right here. I'm not even risking this whole thing. I'm risking this. I'm basically saying this breakout bar will hold, because if it doesn't, I'm out, which I see the dollar picking up and I see VIX coming down. So that is somewhat supportive. What do we have here? The Mag 7 picked up, going flat over the past 2 minutes. And then the SPY is still picking up right here. So we might be seeing a trend reversal. I'm seeing a clear trend reversal in options, maybe the start of it in price. With the Mag 7, I mean, if it is a reversal, it's literally just the start of it right now. Just the start of it right now. Well, we're going to see. I'm kind of watching the cues to see if this breakout is rejected or not. Here, let's go to the 5 minute. Let's go to the 5 minute. That's also, I guess I should stress, one of the cool things about trading futures is there's no such thing as pattern day trading when you're doing this. So you could trade as much as you want. So I think, especially if anyone here, like we've all kind of been through it, where you have to consider pattern day trading. And obviously it absolutely sucks. Absolutely sucks. And I feel like you're like, oh, no, I don't want to get stomped out today. So you end up taking on more risk than you want. That's the beautiful thing about futures, is there is no pattern day trading. So you could be using stops all the time. And you're like, dude, if I get stopped out, I get stopped out, because it doesn't matter how many trades you take. Speaking of that, I'm about to get stopped out on this trade. I'm about to get stopped out unless there's a miracle recovery. A miracle recovery at 800 doesn't seem it. It's getting awfully close. Awfully close. Dude, it is flirting. How did it not tag me out yet? How did it not tag me out yet? No, dude. Dude, if this bounces all the way back up, what a fortunate placement. If I am this lucky, I should go buy an actual lottery ticket today. If, which is a giant if, because as you can see, it's been getting pummeled. But Jesus, if this works out, dude, even if it bounces back up half the way, I'm going to be amazed. Like it was that close, dude. But hey, sometimes that's trading. Sometimes you're on the right side of luck, and sometimes you're on very much the wrong side of luck. But that's why you gotta, if anything, focus on everything in your life possible. Look at that. That's crazy. That's crazy. Well, I shouldn't be talking yet, because it could easily still just come down and get me. So maybe I should be shutting up and see if this actually does play out. But if it does, that's actually fucking crazy. Fitch Ratings, upward pressure on goods prices from tariffs means the Fed is likely to become more cautious about further rate cuts in the near term. Tariff hikes will result in higher consumer prices and lower corporate profits in the U.S. U.S. Commerce Secretary Lutnick, we should use robotics in the U.S. rather than overseas labor. Fitch Ratings, U.S. growth in 2025 is likely to be slower than the 1.7% that we had projected in March, given the higher than anticipated tariffs. If you say so, brother. If you say so, brother. I was almost green there for a second. It was almost amazing. It looks like the market is reacting to whatever Fitch is reporting right now. Fitch had their commentary. Market got hit, almost wicked me out. Then we popped back up basically just to this EMA line. We are clearly below VWAP. VWAP is all the way up at 18,945. A recapture of that would actually get very, very interesting. Very interesting. Dude, I cannot get over this. That is. It got to 94.5 or 0.25, and mine was just arbitrarily at night. I literally just went slightly below. This was at 95.25. They barely wicked it out. I just arbitrarily went a little bit lower. That is crazy. That is crazy. Come on, get this trend line breakout. Let's keep going. Let's recover. Let's end this day in the green. Do you know how fucking wild that would be if somehow the market were to push green? I mean, it's a non-zero chance, but to recover 4% when you only have 4.5 hours left of trading, that's actually probably not going to happen. Like, it could happen. There's no rule against it, but it would be bonkers. It would be absolutely bonkers. All right, here's the Mag 7. All right. What do I want to do over here? Take a little stab at it. Take a little bit of a stab at this. Oh, I just got to remember to keep my sizing reasonable. Come on, Matt. Keep your sizing reasonable. Don't do anything crazy. Don't do anything crazy. All right. What do I want? What do I want? All right. Okay. Buy market. All right. We're seeing what can be done, what can't be done. Did this break? Oh, it did break. Nice. Okay. Well, I'm hoping that this breakout is real and it keeps going. In reality, the entry point, I should have been in at 19. I should have had the patience to not chase this, wait for a form of a pullback, and then I should be in at 18,820 instead I'm in at 25. So that sucks because if I was in at 20, my risk right now could be 14 and I'd be good. Instead, I'm up here and I basically need this breakout to actually hold. If we keep going, if we go up to 18,900, I'll move my stop once again to break even as I did before. And hey, it's a lottery ticket. I mean, theoretically, I could do it now, but if I were to do it now, there's just such a high odds of maybe unfortunately getting wicked out. On a little bit of a push though, the odds start to increase that maybe you're on the right side of an actual trend. So for right now, maybe I should move my risk up a bit to I'm just seeing this shelf right here. So moving it up from 94 to 13. So that's about 20 points. So taking about $400 of risk off the table and just hoping that this actually does legitimately push. But even this, that's about 30 points. So I'm risking $600. Okay, better than the 1,000-ish that I was risking. So cutting my risk, but really what I want to see.
Connection lost.
Hello? Connection lost. Well, that could be problematic for me. Come on, hold. I'm a little freaked out by this whole connection loss thing. Doesn't necessarily give me the warm, fuzzy feelings I was looking for when I was trading. Is the trade there? You know, am I in? Is the stop in? I care more about is the stop properly in than anything else. So not exactly the sound you want to hear when you're trading, but it does. Come on, just recover. Skynet is dead. All right. Here's a look at the options flow. All right. There's the Mag 7. There's the SPY. We got a little bit of a pump in the past minute, a bit of a pullback, but maybe the trend is changing, or this is just a fake outbreak and we actually do just vomit. Did I aggressively move this? Should I have kept it there? Like, I'm happy with taking risk off the table, but like, is this a wick situation where this was like the legit, like, I'm going to be mad if, how do I want to handle this? I'm just wondering if I moved it too aggressively because I want to be so like risk adverse in this particular circumstance. I want to be risk adverse because this is potentially a fake out breakout. Maybe I got lucky again. Did your boy get lucky again with it coming dangerously close? Do I have that much luck in the system, luck in the tank that it could come that close again? Do you still agree with GME shorts broke thesis? Now they're sitting on billions in cash. I have no fucking clue what you're talking about. The shorts are broke. GME's down. How are they broke? If anything, the shorts would be up. Dude. Looks like the market makers are helping me out today. All right, let's see if on this break, I'd be moving my stop to break even. I mean, just whatever the hell has been going on today. I don't think this might not be the environment for me. Feels like I'm maybe fighting an uphill battle for no particular reason. So I would love this recent high to be taken out, and then I'd be able to move my stop to break even, and then I could just move on with my life. And we'll see what we have. The thesis that shorts think GME are going broke. How do you know the thesis of the shorts? What, did you talk to them? No, seriously, DP, answer that. I don't mean this rhetorically. I don't mean this sarcastically. How do you know the thesis of the shorts? You're stating that so confidently. The thesis that shorts think GME is going to go broke. How in the world do you know that? I've never anywhere on the internet see a GameStop short putting that thesis out there that it's going to go broke. That's like so many people in trading make assumptions based off of nothing. They hold these ideas, they anchor to these ideas that it's like somehow gospel, and it's not. Like, you literally just made that up. You're thinking, okay, so because people are betting against the stock, that must mean they think the stock's going to zero. Like, you literally just made that fucking up, like right now in front of everyone. And that's just such, what the fuck, dude? Why am I losing my connections? That's not good. Like, that's such a dangerous way to engage with the market. You have to be honest about what you actually know and what you don't know. No, just what I'm reading. Don't watch their streams, only yours. But I'm saying it doesn't exist. I'm saying you made it up. Like, I don't even think you read that anywhere. I like, that's my entire point to you is I'm pretty, like, where? Name one place where you've read that GameStop shorts think the company's going broke. Like, you're literally making shit up, and that's such a dangerous, like, I hope you could appreciate why that's such an incredibly dangerous way to engage in the market, because you're potentially basing a trade, betting actual money off of something that you're pulling out of thin air. Like, it is hyper dangerous to do that. Literally just making shit up. Don't do that. If you're going to trade, make sure it's something that's like measurable. You have the evidence to back it up. You're extrapolating better than me about GameStop. I'm extrapolating better than you. Are you admitting that you're making it up? You've never read that anywhere. Didn't you just shit on GME the other day as a company? Right now, it's like current model is stupid. I mean, what's interesting about GameStop is, like, are they going to trade well with the money? Like, if you're evaluating GameStop on people going to the physical retail store or the digital online place to buy things off GameStop, that's not exciting at all. What's exciting is the fact that they're sitting on so much cash and can whoever trade it well enough to make more money, kind of almost becoming like a Berkshire Hathaway. Berkshire Hathaway started as a textile company, and then Warren Buffett just transformed it into a trading behemoth. That's apparently what they're attempting to pull off with GameStop. So if you're evaluating GameStop, I mean, what you think of as the core business, it's stupid. That's not a good business model. Not a good business model whatsoever. I mean, it's like the blockbuster of the modern era. What's exciting about GameStop is, can they actually pull off like legitimate trading, legitimate investments, and grow the value of the company that way? That would be, if you're bullish on GameStop, that would basically be the only thesis. Because if your thesis is that like a brick and mortar store selling games is going to somehow come back, that's just actually fucking stupid. Actually, like, stupid. Move stop loss. That's a good question. The question is, do I want to move it to 33 or do I want to move it to 45? Technically, it hasn't moved enough in my favor yet. I know I would move it into profit, taking out 900 just because that's a key level up here, taking out that 100 rung. But with that being said, I am eyeing up this wick. I am eyeing up this wick for sure. 33. Because that would take another $400 of risk off the table. If I do that, it would take another $400 of risk off the table, and it would mean that I'm only risking 10 points. I would only be risking $200, which is very, very manageable. That's effectively a scratch trade in the world of NQ. That's 10 points. So I'm looking at that. Whoever said that, that's a good call out. I am up here. I'm definitely moving it to break even. But even right now on this push, I'm really, really liking that low. And even here, I would have been lucky. Had I moved it before, you guys would have been like, dude, he was lucky 3 times in a row. 3 times in a row. GameStop, no, going broke. I don't know where people are thinking that GameStop's going broke. How could you go broke when you have billions of dollars in cash on the books? God's warning his children through the Holy Spirit. We are going to see the biggest stock market crash in history and will all happen fast. God bless. God's warning his children. You think God's doing this? Okay, maybe you shouldn't be using the way before that one guy's making up random things. You probably shouldn't be using God as your financial advisor either. Investors are supportive of the store closures and investment elsewhere. Okay, cool. Once again, you still have to explain where you came up with this idea that people thought it was going to go bankrupt. We're still on this fact that you just made something up. Like 100%, you just made something up. You're like, people are betting against it because they think it's going to go bankrupt. Like, find one person, an actual person, with like more than a room temperature IQ that's like, I think GameStop's going to zero. Think it's going to bankruptcy. All right, I'm looking for 900. All right, at this point, I'm moving my stop up to there. I'm in at 44. My risk is at 37, so I'm risking about 8 points, so less than $200. I would love this breakout. I just hope that there's not a swift rejection, which seemingly there is right now. Man, should I just do it and take all risk off the table? Should I just do it now? Do it now, do it now, do it now. Do it! Just do it! Just do it! Just do it! Do it! Come on. All right, fuck it. If it rejects it, it rejects it. But right there, I'm in at 44.75. My risk is at 45. I have another lotto ticket play. This is it. I get it. You might be saying, Matt, why wouldn't you take it? You're up 20 grand. Why would you not take 20 grand? Because you know what's cooler than 20 grand? 40 grand. You know what's cooler than 40 grand? 60 grand. All those numbers, it's cooler. Like 20 grand is cool. So is 40 grand. So is 60 grand. And they're progressively cooler and cooler and cooler. So sometimes you just have to know, like, okay, how cool of a number do you want to do? So right here, as I explained, and as you guys saw before, when you first get into the trade, that's your most risk because by definition, your risk point is the farther away. As the trend progresses in your favor, you increase your stop, like getting closer and closer to where you are, decreasing your risk. And then as soon as you get the free lotto ticket play, it's a free lotto ticket. That's it. A lot of the percentage of the time, you're going to get stopped out. That is life. It sucks. But you're playing this game for the series of trades in this, like the whole series where you're optimizing it not for the individual trade, but for the series of trades. Like you're optimizing your net total profit, not just the profit of that one trade. So to do your total net profit, you go fishing. And every so often, not commonly, but every so often, you catch that white whale. You catch that white whale. So no matter what, worst case scenario for me is I just don't make money. I'm not hurting myself. Best case scenario is imagine the situation where we rip all the way back to where we started today. Imagine the situation where we take out 5475, we push up to 5,500. Imagine if we break that out and go to the next open interest level. I'm not saying that I'm definitively sure it's going to happen, but I'm putting in myself in the position that if that happens even with 10% accuracy, well, I'm in the position to catch it because that gain 1 in 10 times will outweigh taking a little profit 10 each of those times. So it's like one thing to take 500 and you do that 10 times, so you're up $5,000. It's completely different if you're putting yourself in the position to catch like the 10 grand trade, or just like I'm just using whatever hypothetical numbers to explain how the risk to reward ratio works in situations like this. But actually I do need to I do need to limit it today because of the payout. I do need to limit it. What would my max be? I need to figure out just for the payout requests because there's a 30% consistency rule. I think I need to do it at 100 points.
Order submitted.
Because I'm in at 845, 846 just to pay. I think I do need to limit myself to 2K. Oh, is that right? Is that right? Yeah, it is. So because of the 30% consistency rule, I don't want to push it too hard. So I need to get out there. But if I were trading my own account, I would let this ride. Fuck it. I have a lottery ticket. Why would I not let it ride? I would 100% let it ride, but here, that's my max profit. And honestly, I'll just keep moving this up. All right. So no matter what, I'm making some money. No matter what, I'm making whatever, 500, making 500 guaranteed, but ideally making 2K per account. So that is either making 10 grand or making 40 grand. So that's the outcome for me right now. I'm either making 40 grand, which is obviously what I want to happen, or I'm making 10 grand and I try to catch the fish and it just didn't bite and I got absurdly close, but no cigar. And we're way over on the show today, but at this point, since I'm in the trade with all of you, I kind of want to see how it plays out just so you guys can see it. If regardless of how this goes, if I get stopped out or if this hits, that's it. Like, this is the trade. This is my second trade of the day. This is my final trade of the day. Like, this is it. Also, this line doesn't really matter. I like this nice little walk up. I just kind of wish that this push right here got me up to the level that I wanted. Or I could just aggressively move my stop up to 900 and then no matter what, make it grand. So I could make it of, hey, you're either making 20 grand or 40 grand. But if I do that, the odds of the 20 grand would increase. But 20 grand does sound pretty sick. It does sound pretty sick if I say so myself. Come on, just go. Just go. Come on. You could do it. You could do it, Tonto. Ooh, okay. One particular problem is my max profit that I can make happens to be just above VWAP. I didn't realize that. And VWAP commonly serves as support or resistance depending on the direction you're coming from. That's new information to me. Not the support or resistance, the fact that my profit target is right now 6 points above it. So I would technically need at least a VWAP test, maybe not a legit breakout, but a breakout to the degree of at least 6 points. Because right here, you can see we got close and it got smacked a bit early. That does complicate things a little bit. It does add a little bit of complication into this one. If we bounce out of this, obviously I'm just going to move my stop up, especially now knowing that VWAP is like right below. So if we get this pop, come on, I just want to move my stop up. Come on. All right, cool. I just waiting for this bar to close. Come on, don't invert it. Don't be like that. I thought the bar was going to close. And it didn't. Instead, it's just, Jesus. Stop it. Stop it, Dobby. Stop it, Dobby. Well, really getting smacked at VWAP. I feel like I should have been paying attention to that right over here at whatever. What time is that? 11:42. Well, can I get lucky 3 times in a row where it just doesn't hit me? I think I might be running out of luck. I got lucky by dodging 2 stop outs where I would have been in the red. And this one, if I do get wicked out, at least I'm making money. But honestly, to be fair, the fact that we didn't hit VWAP, I don't know if I would have ever reacted to that. Not knowing, like, okay, if we were back here at 11:42.05, like just at that time, I would have said, okay, at least wait for the VWAP test. I would have never anticipated it getting this close, like within 5 points, but then not actually hitting it. So I can't even really kick myself of say like, oh, like if only I knew, because I probably in reality wouldn't have reacted because we never actually tested it. So I would have never been like, oh, we got within 5 points. Yeah, I think the play was bound to play out exactly how it is.
Order filled.
All right, let me get rid of this just so.
Order canceled.
10 grand locked in. 5K, 20 different accounts. And that's all she wrote. I just got smacked at VWAP. If I were trading for the remainder of the day, which I will not be because I don't like trading midday, I'd be looking for this trend line breakout. The high at 11:42 connected to the high at 11:45. I'd be looking for that bullish opportunity just to see if this recovers. Now, of course, there's a non-zero chance that this is the peak and we're going to vomit, but I'd be kind of looking just to see if this short-term pullback breaks and goes back in realignment with this trend that we've seen since 11:07. Obviously, since 11:07, 11:08, higher highs, higher lows. I'd be looking to see if this little short-term pullback decides to break. And obviously, beyond just price, I would be we're trying to hold on to 50 here on SPX. Trying to hold on to 50. I would double check that options flow does agree with that move. Right now, SPY's been climbing, a little bit of a hit in price, not so much in options. Mag 7, a bit more of a different story, a clear hit right there at 11:43, which is unfortunately what I just got caught up in. But I can't say that unfortunate because obviously 10K is 10K. So I'm going to take it. I guess I just don't want to necessarily like overstay my welcome. Maybe later on there might be like an amazing setup, but honestly, I've already traded twice today. I don't want to get into this situation where not only am I over trading, but like over trading in a less ideal environment, which is midday. VIX is starting to pick back up a little bit, but the dollar, that's a nice pump on the dollar. The Qs are trying to get back into their 15-minute range. This is the low of, the Qs are actually almost back at their opening value on the day. The SPY has a little bit more work to do. Interesting. All right, folks. Whoa, my hair looks crazy. I look like a crazy man. That's what I have for you right now. I'm going to go hang out on the Discord. If you want to join the Discord, remember you can for free. It's in the description of the video. Just use that code Goonie. So I'm going to go hang out there. I have some other work to do. Be careful today. Remember, like, crazy stuff happens in these crazy environments. So don't get caught up doing something you're going to regret. And if you are in it playing today, remember, respect your risk, probably size down. This is not the time to be a hero and go for like the grand slam swing. If you're on the right side of the trade, we're going to get enough movement that you'll probably make good money anyway. So don't think that you have to over leverage it to make like economically impactful money to you. No, like we are in an environment where like big moves can definitely happen. So you really don't need to bet that much because if it goes against you, roughly half the time it's going to go against you. You just got to be ready. You got to be careful. Anyway, that's what I have for you. I'll catch you guys on the flippity flip. Tomorrow, we're going to be starting early because we're going to get the unemployment report at 8:30. And then we're going to go later because Jerome Powell's speaking at 11:25. So tomorrow's going to be a big day as well. I hope to see you there. Thank you for all the good vibes. Peace.